Alrighty then, welcome on back to another day of good old Powie Wowie. He's going to give us the Yap Trap today. So we're going to get to listen to J Powell. Oh, Mr. J Powell, what is he going to give to us? Is he going to give us some smooth, soft coddling to tell us it's all going to be okay? Or is he just going to come out and tell us, guys, I gotta make sure that inflation doesn't become entrenched. Somebody says it's echoey. Well, that sucks. Oh. There. Did I solve the problem? Hopefully I solved that. I don't know if that solved it. Let me see here. How do I know? Much better? Somebody says much better. Okay, better. Yeah, good. All right, I fixed it. Hey, well, welcome. Anyway, welcome. So, yeah, good old J Powie Wowie is going to Yap Trap today. It's unclear if Powie Wowie is going to be nice to us or if he's going to be meanie, a little weenie baby. I expect he's going to be a little weenie bitch, because he's going to tell us that he's so concerned about inflation. And that we got to make sure inflation expectations don't become entrenched. And we got to make sure that Donald Trump's new China tariffs that end up causing some potential more risk for inflation don't end up causing problems for inflation expectations. So it's going to be another one of those days. One of those days where, well, we might get a little bit of a Powell rug, but that's okay. We've kind of known that we've got a lot of catalysts that we didn't have 3 weeks ago. Last 3 weeks were great. That time frame though might be over now. Obviously, another red day today. I was kind of shocked by this, but this morning I talked about MP Materials having a resistance level at $100. And in pre-market, we actually shot a little past it. I think it was like 104 or whatever. Because our goal was to get to 100 on MP. And in the alpha report this morning, I'm like, watch that 100 level. That's going to be where it rejects. And as you can see, we're now at $94. So we have indeed rejected on MP material. It could also be, it is a more broad red day today. Yesterday had a nice little recovery from Friday, but the trend now is still down, right? Just the last couple trading days here. So one of the things that was wild. Somebody says, "What time does Powell speak today?" It's at 9:05 California time, so it's in about 2 hours. But one of the things that was wild yesterday on the Qs is, in pre-market we were up like 186 bips, and I wrote in our alpha report, like. I actually read you the quote that I wrote on it. I wrote, quote, about the Qs, and there's a messaging. This is important, I think. So I literally wrote, quote, 1.86 on the QQQ in pre-market is basically max priced. Maybe we extend to 220, but the upside is insanely low. We ended up at 212. So I literally cast a window that was 34 basis points wide on the Qs, and we nailed it. And the point of that is sentiment right now isn't such that we can really justify rallying to all-time new highs. That's the problem. And that's going to be, we're going to continue to feel that here because we keep getting now, crap, we got to pay attention to this. We didn't have that 3 weeks ago. 3 weeks ago, it's like, man, we got nothing to do here. I mean, it says lost 16K on my calls for SPY. Do you have the alpha report? This could potentially help. Anyway, so what's going on over here? Let's see here. So what is somebody's spamming in the chat? The EQX. It is also interesting. Just seeing the number of smaller stocks that are getting, such momentum movers especially in the quantum space. It's quite remarkable. So we'll see if some of that can continue. I do think near-term catalysts make it very challenging, especially since we just had bank earnings this morning. And, they're not, like, all of the banks smashed, but it's almost like, coupon code Schumer Siesta, yep, let's go. It's almost like what you have with the market pre-priced in all the euphoria. I feel like that's what you're seeing with like JP Morgan, for example. Oh, so many IPOs, they're going to beat. It's going to be a big beat. And that's kind of what you see. Stock down, maybe not a surprise. Jamie Dimon warns on the potential for deterioration in credit quality, overshadowing the bank's revenue beat. Yeah, it's more than that. I think they pre-priced in most of that move to the upside. The market was great 3 weeks ago, man. There was nothing to worry about 3 weeks ago. Now you got to worry about Wowie again. Ugh. Somebody writes 300K on margin on a hundred. Wait, 300K on margin? Are you being facetious? 300K margin on $100,000, but 150% yields. What could go wrong? Yeah, that doesn't sound good. What is your thought on data center stocks? Well, all the data center stocks. There was actually some data center news this morning out of Oracle, and it actually might be worth looking at it. Some of this news. Let me see here. So it was something about how they're now considering doing partnerships, multi-lease partnerships. And I didn't, as of like 2 hours ago, I couldn't find any particular details on it. So, but to me, it sent a little bit of a signal that, they're doing anything they can to get this data center space rented out. I think you're going to run out of people who want it. Let me see here. Oracle data multi-tenant lease. I think it was something like that. Or multi-cloud lease. Here, multi-cloud universal credits to allow flexible cloud service usage across different cloud providers. What? So, here we go. I found it. Oh, it was a PR release. Okay, good. So this is by Oracle. They did a press release on this. So, have you looked into small power plants? So, I love the small reactor game. I actually think it's really awesome. I wouldn't touch a stock like Oklo, for example, with a 10-foot pole because the valuation is absolutely dumb. Like, we don't have the infrastructure to even build these SMRs yet. We don't know which company is actually going to be able to pull off building them. We don't know what the permitting is going to be like for them. We expect that they're safer and will be much more deployable. So I'm a big fan of the technology, but I wouldn't touch that stuff with a 10-foot pole. I'd buy that kind of stuff maybe in like a recession, but those stocks are going to lose 90+% of their money. I mean, it was like Alt 5. Like, you can ride these things with momentum, but I made a video on Alt 5. I go, like, this is going to zero. And I made this when it was at $8 or $7 or something like that over here, actually up here. It was like over here, and I'm like, guys, yeah, because I remember making the video over in this area, this volume, when the volume began. And I'm like, this is going to tank. There's no doubt it's going to tank. Hashtag can't guarantee it, but if you watch my video on it, you'll see why. Like, I lay out the fundamental playbook for why they're going to dilute the thing to zero. And it is down over 68% since I covered Alt 5 and said, this is bad. It's going to crap. This morning we were looking at the fundamentals in the, only briefly because it's stupid, but we briefly looked at the fundamentals in the course member live stream on Beyond Meat, just to remind everybody what happens to these plays that seem like they're great plays, and then reality strikes. Here's your monetization of vegans, which had a little fad there. And I mean, just insanity. I mean, this stock is down, 99.7% or something like that. It's crazy. Crazy. So, okay, cool. So let's see what this Oracle thing is. So it says here, Oracle today announced Oracle multi-cloud universal credits. Okay, I don't know that anybody knows what the heck that is, but let's see if we can figure it out. A new licensing option. Okay, so a new licensing option that will enable customers to procure Oracle database and Oracle infrastructure more quickly and easily in the cloud of their choice. Now that's interesting. Okay, so basically it's their software wherever you want. So yeah, as you can see here, will be usable Oracle database at AWS, at Azure, at Google Cloud. This is actually exactly what I've been worried about with the data center space, is that you're going to end up getting, hold on a sec, make sure I don't screw this up. Vertical sources. Oops. Oh, okay, there we go. Let me know if there's any audio issue. All right, well, you will. Y'all don't let me live those down. I think it's the funniest thing ever. Echo, yeah, somebody wrote echoing it. Yeah, it should be gone already again, because I think I figured out why that's happening, which is really annoying. So I gotta figure out, I think it's, oh, I know where it is. I figured it out. Okay. So I need to just mute the audio of that window. Interesting. That's funny. So if I hit that on, okay. All right, well, we figured it out. I'll figure that out later. It's not so terribly important. But that is very good to know. We have figured it out. I'm very happy about that. Okay, so yeah, because then if I pop up the auto mixer, oh, I could just delete it over here. Ah, we are figuring things out together today. But I feel like this is what we do. That's the purpose of the channel. So anyway, let's go back to this Oracle thing, because I think it's pretty important. And Ferdy, that's the good one. Yes. Okay. All right, done with that. So anyway, so this right here on Oracle, it makes me a little nervous, because to me it somewhat suggests they still can't figure out how to get all of their infrastructure built out. They're still suffering. They're still looking at this going, we don't know what to do. How are we going to get all these servers that we have built leased out? This is bad. And so, okay, well, how about we try to go make some more money by letting you use our software anywhere? And if you want to go, like, the way I think about it is this. Let's say you're like, oh man, I really like the Oracle AI data set, or like all my data is at Oracle, but AWS is cheaper or more available. Oracle might lose customers because people are like, whatever, we're just going to go to the cheaper product. And then they lose the customer, right? So here, let's write that down, because it'll make it a little bit more obvious. So imagine, how can we explain this? Imagine you sell, I don't know, it's a service, a software service. Okay, imagine you sell houses. Okay, I think this is an easy example to use. Imagine you sell houses and you say, hey, I'll sell you broker price opinions for, $100, okay? Initially, you only offer this to your clients who sell homes with you, right? Where you get your whole commission. But clients are saying, nah, I am going to switch and use a cheaper agent, a cheaper data center. And so you say, okay, I'll still sell you my service of the broker price opinion, AI data software, even if you leave me, because it's high margin and I want the extra revenue, right? So like Oracle is basically, in my opinion, seeing people leave, and as people leave Oracle to maybe go to cheaper clouds because there's no pricing power in data centers, what do you have? Oh, wow, no surprise. Oracle's like, oh, well, please, at least just, if you don't mind, stay with us, would you? Just at least keep our software, because if you keep our software, that's our highest margin product. And, we would really appreciate keeping that high margin product. All right? That's my take. So, now you're going to have to tell me if the audit, hold on, we're going to try something here. Okay. -9. -2, 0. Yeah, okay, I could do that. I could do 40, 50, 60, 70, 80, 90. Oh, there we go. -95. Okay, I'm going to put that audio problem at -95 decibels. Let's see. I'm going to turn it on for like 10 seconds. Do me a favor. Tell me if you hear an echo, or just say no echo if you don't mind. All right, that audio thingy is on. So if you hear an echo, this is when you would hear it, and turning it off. Okay, hopefully no echo there, and then I figured it out, and then I'll feel very good. So anyway, back to this Oracle thing. So, okay, Oracle says, enabling customers to streamline procurement, benefit from consistent contracts across clouds, and operate Oracle database in their preferred region. Right, yes, this is all about region. No echo. Oh, thank you so much for helping me, appreciate that. So Oracle sells this as you can use your preferred regional data center. To me, they have no PP, and they're pissed people are leaving. And they're so high in debt, they're freaking out, and they need to do this. Maybe I'm a little too extreme. So, procurement and government, often roadblocks for innovation, blah, blah, blah. Seamless administration across multiple clouds. That I could see as being nice. They want their product, right? Realistic upside. You have streamlining data center management, right? But why wouldn't you have all your stuff at Oracle? I don't know. Again, their argument is that you could do it in whatever region you want. Maybe Oracle isn't available yet everywhere. Hybrid cloud, dedicated cloud, blah, 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 blah. Okay, and that's my read of it. So I was part of the construction for a data center as an electrician, and the amount of power and electrical equipment is best. I feel like I was like dreaming about being an electrician the other night, and I was like, man, I want to be the guy who like, all right, boys and girls, we're gonna turn on the data center. We're gonna bring the data center alive, and you're the guy who like pulls the lever to like turn on the power. That's probably push up, for those. And I just think it'd be awesome, just to see it all energized. But then obviously you're probably on the inside somewhat freaking out that it's gonna blow up. But still, like, that's the fun of it. That's the excitement. Like, I do this with my kids all the time. I'm like, we'll go wire something in, and then I'm like, all right, we gotta test it. We're gonna plug it in, and we're gonna flip the breaker, and then you go plug it in or whatever. And then every time you have to, as a dad, you just have to go. It freaks the crap out of the kids. It's the best thing you could do. It's quite shocking to them. I really enjoy it. Okay, so What do we have here? So that's on Oracle. Now let's go take a look at some of the other market movers. We saw MP Material capped out. I want to see if they could come back. And then let's see here. Okay, that's good. All right, we are cooking, I think. All right, good. So keep that right there. JK. Okay, I have to remember that. All right, so let's go in here. Let's go to the sticks. So NVIDIA's down about 3.5. Oh, I will say something that was a great suggestion from a course member this morning, and we do this where we will look at the implied volatilities, and we're talking a little bit about the actual implied volatilities. But a lot of people, it seems like, are really interested in the idea of sell calls right now. And it makes sense because broadly we've been talking about this too, where we're just, if you're extended or you're looking for a way to pick up some of the extra volatility, and let's say you don't want to sell a stock, but you want to sell down some margin and you're at 10% margin or whatever. Some people look and they're like, hey, if I'm at 10% margin, I could actually sell a call for a certain period of time, use that money to get out of margin, and then I'm out of margin, which is great. Now, obviously, a little bit more advanced once you get into selling calls. It's not for everybody, but man, I mean, you know me, I just get out of freaking debt. That's that And it's so weird because I feel like it's like that Dave Ramsey boomer is coming out. And I don't know. I mean, I think that's why the bull bear scale is where it is. Anyway, all right, let's go. Somebody says exactly my situation. Yeah, I mean, so look at that. Literally let's say you're overexposed to Tesla stock, okay? You got a crap load of Tesla stock and you're 10, 15% in margin. I mean, you could do a 30-day call and probably get half of your sold call and probably get rid of half of your margin today. See, that's the thing. Is the cool thing about the sell call is you could actually sell the call today. You pick up the premium right now, and then you pay off your margin right now. And if it goes down, you're good. You kept the premium. You still have that downside risk, obviously, in the stock. Your hope is that it goes sideways, so you keep your premium and you don't lose your underlying shares. And then obviously, if we go into some kind of breakneck rally again, well, you're going to lose some of your underlying shares. But then I always say all right, well, if that happens, A, you could always rebuy, or B, whatever. It was just meant to be. It was a tool to get you out of margin. So something to think about. Okay, so Open Door continues its rollover, which isn't a horrible surprise. It's I think it's going way lower than this. Okay, let's go see what bonds are doing right now. Powell's coming up. Not optimistic about what Powell's going to do for the bond market, but that's okay. Yeah, I mean, bonds are pretty flat. I've got gold at 41, 44, and I've got oil. Brent is now almost under 60. That's great for gas prices. We just got the Mercedes diesel Sprinter van. And we're like, yeah, gas prices fall, please. Wow, look at that. We came within $3 of 414 on Tesla over here. Well, all right. So let's see what else. Let's go pull up some news. We had bank earnings this morning. Banks broadly beat, but a lot of that seemed to be priced in because the bank stock movement was broadly down. I mean, JP Morgan's down, 2.5%, 3% or something like that. It's just somewhat of an indicator that, markets got a little ahead of their skis. I don't actually really like that phrase, but I don't know, people use it all the time, so I guess it's relatable. So, all right, let's go take a peek at what we got. Stocks fall as trade tensions spur dash for safety. Mostly gold. Really, what hasn't been getting a lot of the safety play, bonds. Just not a lot of respect for bonds. Not yet. You really need Powell Wowie to U-turn. So that's going to be a hot minute. AMD says Oracle is pledging widespread use of its chips. That's a cool little AI chart. Is that an AI chart? That might actually just be a zoom up of the chip. It looks cool, that little thumbnail they had of her. But anyway, Oracle will put 50,000 of the semiconductor and data center computers starting in the third quarter of 2026. Well, that's the deal, right? That's like, who was it? It was the OpenAI and AMD deal, right? And so, wow, okay, yeah, now Oracle is going to help build it out in the third quarter. But remember, when they say starting in the third quarter, when you see starting in the third quarter, the first thing, what is the first thing I want you to think of? Okay, and I'm saying, I'm quizzing you so that way you remember better. You should immediately be thinking when Oracle's like, oh yeah, we're going to put 50,000 of your chips in a data center in Q3, starting in Q3 2026, you should immediately be thinking, ha, that's when the NVIDIA check clears. Like, I kid you not. In the third quarter of next year is when the $10 billion from NVIDIA to OpenAI is expected to clear. Oh, man. It's hilarious. I don't know. I don't think you can't make this stuff up. It's wild. So that's interesting. Okay, so then we've got the announcement is the latest frenzy of commitments. There's also, let's see here, credible alternative to NVIDIA. Second quarter AMD shipped 100,000 AI processors. NVIDIA delivered 1.5 million in the same period. It's 15x. Wow. Okay, let's see here. Oracle and AMD didn't specify when they expect to complete the installation, but they say they see it expanding into 27. All comes down to the NVIDIA chips. So somebody's like, did Kevin sell NVIDIA? You know, you gotta be part of the alpha membership to know when I pull the trigger on selling some NVIDIA or all NVIDIA or when I'm buying or what, you know, it's all in there. It's not personalized financial advice. But anyway, I find this very interesting. So I'm gonna grab a screen grab here because I think I actually think it's hilarious. It actually might be even tweetable. You can follow me. Did you know you could follow me on Twitter? I don't think the algorithm really likes me on Twitter. I think Elon, you know, it's like a woeful acceptance. But I'll send it out anyway. So Oracle will put Q3 2026 is when the NVIDIA check clears. OpenAI, a 10 bill deal. OpenAI, NVIDIA. All right. So get that out of the way. All right, what do we got here? Tesla still got a nice little recovery here from some of the lower movement that we had earlier, some of that frustration in the market. Mr. R. Duraz says, I get your tweets. Let's go. Thank you so much. Appreciate you. Okay, so what else do we have here? We've got, even NVIDIA is recovering. Look at that. This is a telltale sign of institutional selling. It should be very obvious to you. But if you don't recognize this, remember, I want to teach you. This is what I do in the alpha too. The goal is to teach you how to fish, not fish for you. What's the saying? Fish for a man, feed him for a day. Teach a man to fish, feed him for life. So, pre-market, it's all retail. The market opens, and you get the market on open and market on close trades that come in from ETFs and institutions. This always happens. And then we get to buy the dip. So it's like the worst time, often, not always, to sell is often right after the market open because you get that institutional dump. And it always seems to like slowly recover. And you know, you consolidate somewhere in the middle. Anyway, we'll see. Q's nice recovery as well. Look at that. The Q's back over a 595. Look at, they barely stopped over here. Nice. That's bullish. That's very nice. So a nice little push through here. AMD's running a bit too, up 2%. Let's see here. All right, let's get other news here. Q's keep going. Pinterest is up about 3% now. That's nice. Okay, so let's now keep going with the news. So that was on Oracle. The Doomers. Nobody knows the Doomers quite like us. Jamie Dimon warns on credit quality, blah, blah, blah. AI stocks are in a bubble, most investors say in Bank of America survey. Okay. Inside the credit card battle to win America's richest shoppers. Yep. So, what is your AI identity? Okay, these are some lame titles. The shutdown consequences for the BLS are dire. Oh, we don't like to hear that. Okay. So, with the government shutdown approaching its third week, the costs and consequences are steadily accumulating for citizens who rely on federal services. The BLS, aka Jobs Report, relies on data that is collected in the middle of the month. If the shutdown continues past this week, it is possible the October Jobs Report will be missed altogether. Wow! The most important jobs reports, September and October, where the government's layoffs are going to hit from, the furloughs. The most important data sets might just happen to not happen. They might just disappear. Somebody says, can we use BNPL on weekend workers? Yeah, there's actually a pay in 4 option on the website, or I think, I'm pretty sure like the BNPL providers are integrated. I'm not the biggest fan of the BNPLs, I have to say, but it does exist. So this is not good. Powell's at 9:05. The stakes are larger than the numbers released in the report. Trump has attacked the BLS. Let's see here. Any disruption is entirely preventable. The report is a well-oiled machine featuring predictable schedule of data collection processes. Household survey and the employment survey go out as soon as this week concludes. Oh, so the surveys just aren't going to go out at all. Wow. It's 12:05 Eastern. Yeah. So, 2 helpful fronts: using a mid-month reference point as opposed to an end of the month enables faster production. Somebody says, when will there be a legit investigation into the hundreds of millions of dollars into puts bought the minute before the tariff news? This is somebody donating €5, so they must not understand how things work in America under the Trump administration. There won't be. And if that makes you lose faith in the American stock market, it should. It is fraud. It is wrong. But that's what we got. 4 more years, baby. It's wrong, but it's the game. I think it's bad karma to participate. So my thing is, wake up every day, do the best and the most righteous thing you can do, and then you never have to worry about the karma gods coming after you. You want good karma, not bad karma. That's bad karma. But unfortunately, that's the way it works when we make fraud great again. I'm sorry. That's going to piss off the MAGAs. Oh, I shouldn't say that either. That's going to piss them off too. Can we talk about our joint hate for Kamala? Dude, Kamala sucks. This is helpful on 2 fronts. Using a mid-month reference point as opposed to an end-of-the-month accounting can enable faster production. Okay. Let's see. It's a gift that the calendar falls on a Sunday. The reference week falls through the 17th, so collection is not scheduled to start. There's still the opportunity for normal data collection to proceed under 2 scenarios. Either the shutdown ends or the BLS is allowed to recall staff. Right. I don't think the shutdown is ending anytime soon. House Speaker Johnson says Trump administration has the right to move funds to pay troops. Yeah. All right. Raises the question, if the administration has already made an exception to the shutdown in order to produce price data, why not make a similar exception for jobs data? Because they don't want the jobs data. This is the whole damn point. The whole point is to hide the truth. You can't handle the truth. This is perfectly reasonable explanation of the CPI. There is a perfectly reasonable explanation. The September CPI is part of the annual cost of living adjustment, which is used to allocate benefits for Social Security. Yes, yes. Make sure my voters get paid for. or get their COLA adjustment, but don't reveal how the state of the economy is actually going poopy-doopy. But more speculative, reasonable expectations. As a candidate, Trump accused the BLS of producing data for political convenience. Once president, he fired the commissioner on the basis of political bias. He attempted to replace her with a yes man, ill-suited and ill-qualified for the position, that his nomination was withdrawn before even getting a hearing. That's true, because Congress woke up and they're like, oh, this is bad. Okay. And now, just as the job market is showing signs of increasing weakness and as private data sources are floating the possibility that weakness is tipped from a slowdown into contraction, and as hundreds of thousands of federal workers are forcibly sidelined, the jobs report is being held, and the next is being jeopardized. Is the president afraid of what it might show? Yeah. Somebody says, I think Powell could make a good president. I actually don't think so. I don't think, A, he would ever go for it, because he would hate his life, man. He doesn't want to do that. It's a logical question to give the administration actions rhetoric so far, but the poisonous one for the BLS. Any disruption to or irregularity in the data is bad. For it to come while the economy is uncertain and the agency devotion to nonpartisanship is under attack, it's potentially catastrophic, or maybe not. Maybe even the possibility of disrupting jobs report will galvanize support for the long beleaguered BLS. Yeah, right. Okay. Well, whatever. I guess we might not get the next jobs report either. I guess TLT will never go up. Anything to keep TLT down. Because if we actually got these jobs reports, we might get TLT 100. But no, Donnie T don't want that. Oh, that's funny. That's all right. Who needs TLT 100 when you got MP material 100, which we called in the Alpha report, although it did happen much faster than I thought. I did suspect that 100 would be a rejection point, as it has become today. Qs, are we stabilizing or what are we doing? Consolidation here? Nah, rolling a little bit. A little bit of a rollover. Is Tesla rolling as well? Yeah, a little bit. A little bit of the roll. Okay. All right, let's keep going here. So, I don't like that. Let's go look at the journ. The journal! Ah, yes. The Wall Street Journal. Stocks fall after China raises anti-trade fight. Okay. Oh, let's go look at our communist stuff. Globaltimes.cn. We got to go see what the commies are up to. So, the commies, exclusive. DJI lodges appeal in U.S. court against ruling over inclusion in Pentagon's blacklist of alleged Chinese military firms. Chinese drone maker DJI on Tuesday has lodged an appeal in U.S. Federal Court of Appeals regarding its lawsuit against the Department of Defense. Chinese drone maker DJI filed a lawsuit challenging the decision to include DJI in a list of Chinese military companies, seeking to be removed from the list. The U.S. judge rejected the bid to remove them from the blacklist. The judge rejected some of the government's findings for justifications, but they were still not removed. Wow. All right. I actually think the DJI products are freaking amazing. I love my Chinese technology. China. China firmly opposes port fees, vows to fight to the end if forced to fight, and keeps the door open for talks. Yeah. And we got a nice little happy panda. I think it's so interesting that in the middle of their news website, they just put images of like happy pandas in forests. China's new generation of artificial sun. Some fancy reactors. That's cute. They're innovating again. All right. The Chinese, they're kicking our butt. What are we going to do? GM takes $1.6 billion charge on EV pullback. JP Morgan profit jumps. Stocks fell down. Total liquidations on crypto. Yeah, that sucked. Let's go take a look at the liquidations. Liquidations. Bitcoin liquidations. All right, here we go. So, Bitcoin liquidations in the last 24 hours. We have seen $465 million of longs get wrecked. About 200 mil of shorts. So, looks like longs were getting wrecked more so. And then obviously, if we look at what happened over the weekend, we had $19 billion of crypto value get destroyed. But two specific accounts made $160 million. Insane. The president's surprise announcement triggered a cryptocurrency sell-off that wiped out more than $19 billion in leveraged positions. Gone. Wiped out. Margin called. Margin bankrupt. Two accounts placed bets against the market in the minutes before the news. Mind you, like somebody in the chat's asking, like, oh, maybe China placed those bets. You think Trump called China to let him know that he was about to post on Truth Social? Come on, man. These are people sitting in the Oval Office going, man, this is the easiest way to get rich. Listen to Donald Trump ramble about when he's going to send a truth. Take 20 minutes to type it out because I don't think he could get his fingers to move faster, or he's got to dictate it to Susie. Oh, Susie, will you help me with your hands and your agile fingers? And somebody else will type it out for him. And then he'll have to correct it and go back and forth with exactly how he wants the verbiage to be shouted out in your room with 10, 20 different people. You got the intern in the back that's like, oh shit, dude, I'm about to make bank. It's all fraud. It's all fraud. There are no insider protection rules in the White House. There are none. There are zero. In fact, the insider trading is probably encouraged. In fact, how do you know? There's a picture of what insider trading looks like. Let me see if I can get it here. I found it. I think I did. There's literally a list of what insider trading looks like. Are you ready for this? Meet our insider traders. Holy shit. There's a whole list of them. Oh my gosh. Wow. World Liberty scam. Oh, well, you do have a co-founder, Emiratus. Oh, the Emiratus. Look at him. Where's our diversity here? Not much. We got like two diversity here. There's no, maybe if we had some more diversity, we wouldn't have all this insider scam. But hey, at least Alt5 is doing well. Alt5 is the liquidity play for World Liberty. Basically, they're dumping shares of Alt5 to go buy as a treasury stock, World Liberty scam token. And, when this was like $8, I'm like, guys, this is going to go to zero. This is a scam. And it's lost like 68% since then. It's going straight down. So he goes 2 points for diversity. 2 points achieved. 2 points more than we thought we were going to have. Oh, man. It's pretty bad. It is pretty bad. Nobody knows scam better. Nobody knows. It's all right. Just think good thoughts. Think good karma. Be a good human. And try your best to be a good person. Somebody says, how can you insider trade Bitcoin? Oh, come on, dude. You take non-public government information and you trade on it. That's the definition of insider trading. It's been banned. It's against the law. It's fraud. It'd be the same thing as like, if J-Pow's like, hey boys, we're gonna jack rates today and rug everyone, and then they put like $100 million option bet out, or an option bet that would yield him 100 million bucks. It'd be the same thing, dude. It's insider info. Look it up. Somebody says, have you ever been to India? No, I have not. I have not. Somebody says, how come my alt 5 put won't print? Okay. All right, let me explain this. I'm going to give you a little bit of institutional knowledge on how scams work in the stock market. When you have a scam like alt 5 that we've known is going to get liquidated because you're trying to provide exit liquidity to Trump's token scam, you might wonder, oh, well then I should buy a put contract on it because it's going to go down. Oh yeah, this seems very logical. And what is the problem? The problem is every other jackass is already doing that. So the puts from day one already price in that it's going to go down because it's a scam. It's written all over it. So that's when you have hedge funds that have already allocated so much money in puts that they're barely eking profit on them. And then you're like, man, it's down 68%, but my option on my put contract's still red. What's going on, man? So you're getting screwed because everybody knows it's a fraud. So it's already priced in. So you can't make money on the put. Like, that's the frustrating thing about options. In order for you to actually make money on option contracts, you have to be making a bet that not everybody else is already making. And then you have to be right with the timing of it. So this is why options are like deadly. So you have to be right when everybody else is wrong, and you have to be right with the timing before you expire and lose all your money. And you also have to be right with volatility. That's the other issue. Because like alt 5, for example, you go buy a put when the volatility is at the sky. You could just get volatility crushed. So the volatility plummets because it just slow bleeds. It doesn't fall as rapidly as you need it to. And you just get theta decayed to poop. So you can't make money. So, then you could also try to short it if you could borrow the stock. But the problem with that is oftentimes the interest rate on the short is so high, again, already building in the fact that it's a scam. I did draw a support level for this. The support level is right here. You could see if you look at where it is now. It was at like $8 when I made my first video about it, talking about how it's a scam, it's gonna go to zero. It's at $2.20 now. After I made my video, Eric Trump dipped out of the board because he's like, oh man, the gig is up, I'm out of here. The scam's exposed, man, let's dip. Okay, then you got this support level here. And so what you have to do is you have to analyze the trend, and you can see the trend. And then if we get our next support level, you can see it's all the way here at 0. Oh man, it's just comedy. Oh, I can't take it anymore. I can't take it. I can't handle the truth. There's too many scams. They can't handle it. Blame Trump. They weaponized the court in a real estate lawsuit that cost him millions. I lost millions getting sued for saying my apartment was 33,000 square feet and it was only 10,000 square feet. Now I'm gonna fraud Americans. That's basically what you just wrote. That's a good one. I haven't heard that one before. Wow, that's special. All right, so what else is going on here? So let's see, 84 bips. The Qs are stable right now, which is good. Okay, all right. So stability here. Let's see here. Citi, Wells Fargo's actually doing pretty decently. Not bad here. Not bad, Wells Fargo. That's pretty good. So Wells Fargo had a nice pop because JP Morgan didn't get the privilege of this. JP Morgan's still down a couple percent. AMD's doing well. You've got NVIDIA still struggling a little bit. Possibly because there's just so much enthusiasm about AMD right now. You know, it's possible people are just like selling NVIDIA and trying to like move into AMD. That wouldn't actually surprise me. And there's some logic to that. That makes sense. So let's see here. J-Pow is now about 1 minute and 4 minutes away, so we'll be covering J-Pow when that comes. Tesla is now 424. Okay, very well. Let's go. Let's get into. Somebody says "Poppy." Oh, is the audio
going to crap again? Okay, we'll fix it. There you go. That should be better. Man, I hate it when that happens. That should be better. Oh well. Yeah, and I don't know why. Like something just breaks over time. You know, the audio just goes to crap after like 2 hours or whatever streaming, because you got to factor in the course member live stream as well. I don't know what it is, but it should be better now. Okay, so let's now go peek at the rest of the news that's going on this day. Okay, so here, Bitcoin dropped 12%, forcing liquidations, which triggered more selling, forcing prices lower. Less popular tokens saw liquidations as steep as 80%. Somebody says still bad? Really? Cutting out every 10 words or so? No. Hit the refresh button. It's fine. Okay, hold on. Give me like 20 seconds. Oh no, I don't want to do that. No, there's nothing. I don't think there's anything I can do. What the hell? Okay. Hit the refresh button. How about that? Okay, so anyway, let's keep going here. Well, crypto has fallen before analysts say the sharp downturn exposed the extreme leverage that has fueled a months-long rally. Well, imagine how much leverage there is in the actual system. That, like, with leveraged ETFs and otherwise. We were talking about triple leveraged ETFs this morning in the Alpha report. And people, I don't think people are paying attention to what's going on in the triple leveraged ETF market. You can literally see an ETF go bankrupt in a day. Instantaneous bankruptcy. It'd be crazy. Okay. Recent trading by 2 hyperliquid accounts show at least one trader made millions by betting the price of Bitcoin would decline. So 80 million is deposited into an account that bets the price of Bitcoin will fall. $80 million, dude. $30 million is deposited into a second account making similar bets. Final bets against Bitcoin placed a minute before Trump's threat. Profits withdrawn from hyperliquid accounts. Wow. Wow. That's insane. All right. Well, I don't know what's going on with the audio. So I'll go restream it, I guess. I don't know. So many people are bitching about it. Hold on, let me try this.
I'm just tired of seeing the bitching in the comments. There. Is that better or worse if we try this? Someone says audio. It's like half of the people say the audio is fine. Somebody says restarting YouTube fixed it. Audio is fine, audio is okay, audio is fine, audio is fine. Oh, a bunch of people say audio is fine. Oh, alright, well. Alright then. Yeah, no, people are happy. Alright, never mind. Well, thank you for the heads up. Appreciate it. Thank you. We now have consensus. Timing of trades, placed last minute, sparked speculation. Okay, that's fine. However, bets were placed after Beijing announced new export restrictions. Okay. Yeah, I mean, this is wild. Absolutely wild. It's without a doubt inside the White House, insider trading. Okay. So let me see here. Okay, so somebody's writing about the Hegseth issue, which I think is interesting. Let me go here. So Osnet is saying, it amazes me that people are truly dumb enough to believe the claims made by Hegseth that this issue is about the press having to wear badges not being allowed within restricted areas of the Pentagon, instead of what it's actually about, which is attempts to threaten or intimidate journalists who dare publish information or use official sources that are not directly approved by the Pentagon. I actually think this guy's right on. Fox News privately told their reporters covering the Pentagon that they do not expect them to follow through with today's ultimatum from Hegseth, requiring them to sign a pledge, agreeing to new rules and restrictions imposed by the Pentagon, or risk losing press access. Fox joins virtually all other news outlets who have rejected the new restrictions, with the only One American News Network having signed the pledge. Of course, that's how you get, government-controlled propaganda, basically. I mean, this person's right on. Very interesting. All right, what do we got at the Times? Donald Trump's favorite paper. Nobody knows the Times better than Donnie T. Trump ramps up trade war as new tariffs on lumber and furniture take effect. Oh yeah, who remembers this? Made a video of this walking out of the mall, a couple weeks ago. President Trump ushered in new tariffs on furniture and kitchen cabinets on Tuesday. Great. Adding to fresh rounds of levy. Are we playing Powell bingo today? Hell yeah. Tariffs ranging from 10 to 50% on foreign wood products and furniture snapped into effect after midnight. Wow. These tariffs are so dumb. Like, there has not been a single person who's been able to provide a real good long-term argument for tariffs. Not a single one. People try to make the argument, but military security, whatever. Well, we can invest in promoting our own secure industries without having to destroy all of the others that are affected by this crap. It's insane. But whatever. Blah, 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 blah. All right, so I guess we're getting 10% on wood and timber from Canada, 25% on furniture, set to go up on January 1st, and then kitchen cabinets are now 25% plus vanities. The good news is we just installed a lot of kitchen cabinets and vanities at House Hack, so we're doing good. House Hack is kicking butt. We got our renovations going. We got like 7 deals we closed just in the last, 30 days or whatever. I think the next one closes tomorrow, actually. And, yeah, we're kicking butt. Obviously, in addition to what we're doing with our AI efforts, too. It's going to be very fun. Very fun. No, but nobody knows. Nobody knows. Pete Buttigieg on rebuilding America. Yeah, whatever. Inside the improbable and audacious, unstoppable rise of Zoran. I spent 5 months following the campaign, donors, officials. I've learned his success is due to much more than charisma. Oh, what do they have to shill for him? So, dude, a 49-minute article? Bro, I ain't reading that right now. You know what? Dude, I don't ever really do this, but we're going to do it today. I just need an AI. Why is the AI summary tool not working? We need to gamify this page. I don't care about that. I want to summarize this page. I ain't got 49 minutes for this. For a New York Times article. I mean, maybe it was like a 49-minute Meet Kevin video. That would be worth it. But Times article? Nah. Leveraged a grassroots digital savvy campaign focusing on affordable housing and rent freezes. Yeah, which is a scam. The rent freeze argument is just, it's like dumb. It's going to achieve the opposite, but that's all right. Let's see here. Presents a more mature, flexible version of the leftist policies, softening some. Yeah, he has actually been softening some of his positions, which has been good because it brings him closer to the center, which is good. Arresting Bibi. That probably didn't age well now with hostages released, but whatever. Expose fault lines within the Democratic Party. Good. I mean, the Democratic Party needs some help. So... yeah, all right. I don't know, maybe I'll read that later, but I ain't going to read it right now. All right, put that away. Besant slams China. They want to pull everybody else down with him. Well, I mean, honestly, it's kind of like it's not that easy to only blame China here. You know, there are two people at fault here, or two countries at fault here. It's the U.S. and China. Like, China is not getting out of this scot-free. They definitely deserve blame. But, you know, Besant, I think the one thing that Besant does is he frequently argues that they're in a recession. Here, they're in the middle of recession depression. Like, their GDP is about to miss a 5% growth rate. 5% is not a recession. Now, I don't believe the Chinese numbers, but do I think that they're in a recession right now? No. There are manufacturing issues. It's really hard to manufacture right now because, you know, these tariffs have actually really hurt them. So you could argue they're potentially in a manufacturing recession. I believe that. China's going after American firms to hit back at Donald Trump. Yep. Yeah. Let's see here. What else? Can AI replace junior workers? Fixing the welfare state looks impossible. Well, of course. Nobody wants to cut spending. That'd be crazy. Who authorizes spending cuts? Powell is now about 50 minutes away. So let's see here. Internal Oracle data show financing challenges. We saw that. OpenAI is working with SoftBank. The race to rent out NVIDIA chips intensifies. Oh, here we go again. More leasing problems. Oh, man. Ugh. If you're still bitching about the audio, listen to what everybody else is saying, which is close the window and then just come back. Or don't, you know, whatever. Like, then you don't get to see the shorts. Or, you know, I got a Yoshi mug today, which I think is kind of cool. You know, if you haven't seen the Yoshi mug yet, that's a nice one. I've also got this mug here, mostly because the flash sale is going on at Investing Pro. They're the sponsor. But I got my investing.com mug, which I think is kind of sexy. Yeah. But that's mostly because so many of y'all like the EPS forecast that they do. But anyway, let's get into this. So what do we have here? We've got the race to rent out NVIDIA chips. Let's see here. NVIDIA demand from NVIDIA's artificial intelligence chips has spawned half a dozen multi-billion-dollar cloud providers to buy their chips, install them, and rent them out. Great. Another upstart, Together AI, is now joining the race of these neo-clouds, okay? Together has been leasing NVIDIA chips from cloud providers and renting them out to other startups. And it's beginning to make its own purchases of NVIDIA chips in Saudi Arabia. Yes, we need them everywhere. Somebody says house hack or reinvest. Well, it's house hack doing business as either house hack or reinvest. It's both right now. But we'll probably slowly transition everything to reinvest over time. We actually think it's great because like what we're going to launch with the AI is in part going to be all about like here's how to reinvest, you know. So it's a really cool merger of everything that we've been doing. And what we're doing with AI as well. So, Together hopes owning AI hardware will improve gross profit margins. Yeah, good luck with that. The 3-year-old startup has doubled its annualized revenue to more than $300 million. That's great. As demand from companies like Cursor's maker Anysphere and some others have picked up, like 11 Labs. Oh, that's cool. All right. Startups are using techniques such as reinforcement learning to improve open source models. Fine. Together is still burning cash. Someone familiar with the financial said. Well, of course. Neoclouds like Together, CoreWeave, Lambda, and Nebius try to differentiate themselves. Somebody says, no shade, but I do think Reinvest has more staying power than House Hack. Yeah, I mean, like, House Hack's a great name, sort of in like YouTube and the community. But remember, we want to IPO this biz. So we want to IPO it as like a real estate data and AI company and a real estate holding company. So it's both, or maybe even developing. But we think that has, I mean, it's also kind of cool because it's sort of like real estate invest, reinvest. in America, right? Like, I don't know. There are some cool things with the name. We really like it. Anyway, all right, get off the topic. People are going to start leaving me content. Kevin, all you do is shill your stuff.
Coupon linked below. Big PP.
Now, so these services enable customers to run open source AI model using application interface to find API business could be critical. Costly NVIDIA chips have left little room for profit. CoreWeave is trying to expand its sources of revenue. It recently bought a startup to expand the sales of software. Yeah, dude, they're all freaking out because they can't make damn money. They can't make any money. To Glory says, Shill McShiller. Meet Shill. Nobody knows Meet Shill better than Meet Kevin. Together, oh, somebody's cooking bacon. Oh, it smells so good. Why do they cook bacon in the mornings while I'm working? It's so good. Together began buying NVIDIA GPUs and is now discussing working with data centers in Saudi Arabia. It isn't clear if Together would actually own any of the facilities. Buying chips rather than leasing them could help them lower cost, maybe. That could help them improve their gross margins. The figure is lower. Okay, revenue from Together, rental business, blah, blah, blah. $5 billion valuation. Let's see. Neo Clouds. Here we go. 110 million. Okay, NVIDIA will also buy unused data center capacity until 2032. Remember that. Nebius, relatively little debt. Microsoft recently committed to renting, shifting to buying Together. Cool. NVIDIA support. NVIDIA has financially supported all of them. Uh-huh. Yep. Got to build up the bag holders. All right, I don't think that article was actually that useful. Okay. Startup using AI to translate documents into data. Oh, who cares? Walmart announces it will sell products through GPT's instant checkout, whatever. Let's see here. Goldman, AWS, AI ad tech land grab. All right, boring. Next. The autumn of Ayatollahs. Foreign affairs. You guys are too slow. Oh, the yield spread's up a little bit. So the yield spread, if we get a true China shock, this is going to skyrocket. It's either China shock or jobs data. If we get double jobs data, oh man, double jobs data is gonna push us over one. I feel like it'll just be so sudden. Why is ICE so aggressive now? Trump. They write an article on that. All right, let's see here. What else? Trump's call to pardon Bibi stuns Israel. Okay. Pennsylvania man pleads guilty to arson attack in a governor's mansion. Blah, blah. Obama stars in ad backing Newsom's redistricting plan. Yeah. Great. The U.S. and China are about to launch the next frontier of the trade war. Oh, great. All right. How do you get the political article? You just go to a private browser. All right, but then I can't highlight, which is annoying. The U.S.-China trade wars lurched from fragile truth to bare-knuckle brawl. New tussle, 100% tariffs, the software, that was all Friday. Let's see, new fees will have relatively minimal impact on the U.S. given that U.S. exports just a fraction of China, of the cargo to China that flows the other way. But Beijing's willingness to impose the fees underscores the conflict. Okay. Raises the stakes ahead of the November 10th. Don't worry, we'll get taco. We will get lots of taco. There will be no shortage of taco. We will taco. In fact, if you go to meetkevin.com/data, you could get some really good insights into data. You go to meetkevin.com/data. And you could go to the bull bear scale, which sits at 4.3 out of 10. I should probably update that to 4.2 for today. But anyway, if you look at the taco meter, the taco meter says we should be good. The taco meter is very, very happy. So Tesla just had a little dumpy dude loss. Nvidia, still consolidating a little bit. Q's, All right. When's Powell coming out? 40 minutes? 45 minutes-ish? Bond's basically flat. Come on, buddy. Break out of this line, you little weenie. This is what you need. You need a break out of these two lines here. So if you could break out of these two lines, we's going to the moon. Which is probably bad for the economy. But, oh well. Nobody knows the economy quite like we do. All right, what else? Elite Madagascar military unit says seize power. U.S. shipping chaos. I feared my wedding is destroyed. Okay. How hormones control your mind. Not mine. No emotion over here. Okay. Next. Al Jazeera. 5 Palestinians killed by Israeli forces in Gaza despite ceasefire. Al Jazeera tried to stir the pot. I mean, it's bad if it's true. Maybe it's Israel stirring the pot. Soldiers kill at least 9 trying to return home. Well, that's not good. What happened? First major violation. So what happened? Let's see. Usually you could see it in their little live blog over here. But that's quite unfortunate. Trying to go home and they were shot and killed. Right, but why? So there should be an explanation for why. And this isn't good. What is this here? The UN Agency for Palestinian Refugees says humanitarian supplies are still being blocked by Israel. This is always how ceasefires become fragile. At least 9 people have been killed across Gaza. It'd be nice to know why. All right, well, we'll have to pay attention. All right, what else? Fed Powell addresses economy pulled between risks, jobs, growth, and prices. Yeah, no kidding. Small cracks of dissent. Cracks of dissent emerging in GOP? No. Really? No. Hassett? Dude, no. Kalshi, Federal Reserve. Those are just the bets right now. Kalshi, Federal Reserve, Chairman, Hassett. Who will Trump nominate? No! Dude, no! The guy is such a shill, man. He's such a yes man shill. Damn, no! And it's popping off, so you know they're insider trading this. Man, you want to get rich, just get an internship at the White House. Yeah, just in the last 3 days, it really popped off. Oh, man. All right, well, that's unfortunate. The U.S. saved him from the Taliban. Trump wants to send him back. Send him back to the Taliban. Send him back where he came from. Oh, yeah, where was the dissent piece? That was Politico, right? Oh, sorry. That was a leaked image of the insider traders. Thought I closed that tab. Oops. Don't rewind. Whew. Starting to choke on the amount of scam. All right, so small Republicans who've been pushing back. Oh, Margie Taylor Greene, she's not really a small Republican. She's pretty loud. Kevin Stitt told the New York Times that he disagreed with Trump's decision to send the National Guard. Yeah, but what does that have to do with him supporting the shutdown? I'm carving my own lane. Absolutely disgusted by the health and insurance costs that are going to soar. All right, so Marjorie Taylor Greene. All right. So Spencer Cox, head over to X. He took over X so that we could express unhappiness about canceling the largest solar project yet. This is how we lose the AI energy race to China. Oh, yeah. Yeah, what was it? The Financial Times just reported that there was a big pooper duper. Somebody writes here, better be careful. Might have Trump shut down your media company. Well, then it was meant to be. You see, me, Kevin, doesn't give a flying hooty dooties about the fraudsters. He's going to do his best to provide his perspective, and if he's wrong, he'll say he's wrong. And when he's right, he'll remind you.
Coupon linked below.
No, in fairness, we're not always right. We were scary right yesterday on the direction of the Qs. I think we're hitting like 80%. We're doing pretty decently right now in the Alpha report. It's pretty good. So we're very excited about where we are right now. And I think it's great, not only for people who are day trading, but also medium-term traders like, swing trading. And then, of course, long-term fundamental analysis is useful as well. But, whatever. So what is this? This is how we lose the AI arms race to China. However, their innovation permitting... Yeah, he's quote tweeting this. Just in, the Esmeralda solar project, which would have generated 6.2 gigawatts of power, has been canceled. And I think that's so weird. It's like... yeah, somebody here writes, why should insider trading be illegal in the executive branch, but illegal, I don't know what you're saying, why should it be illegal in the executive branch and legal in the legislative branch? It's not legal in the legislative branch anymore. They killed it. They made insider trading used to be legal in Congress. So for decades, insider trading was absolutely legal in Congress. Now it's illegal. Now, does that mean it doesn't still happen? Of course the insider trading still happens. It's just wrong. But you have to be careful. Like, people get so emotional about why are you being mean to Trump? I voted for Trump. It's like, man, suck it. This has nothing to do about who you voted for. Like, one wrong over here doesn't make the other wrong okay. You got to wake up to that realization that just because some other scumbags in Congress insider trade, even though it's illegal, doesn't mean that it makes it okay for Trump to do it. I don't know. Maybe one day people will wake up. Maybe not. Probably not. Esmeralda solar project has been canceled. Just when we need more energy in America for all of the AI, we are now canceling more projects. The Bureau of Land Management says the largest solar project in Nevada has been canceled. Esmeralda was supposed to produce 6.2 gigawatts of power, and it's been canceled. Continue reading. Man, I'll just go to the Financial Times. Financial Times, solar project canceled, Trump. There it is. I will just take a look at this one. Okay. The U.S. has moved, there it is, Esmeralda, 6.2 gigawatt project that could power nearly 2 million homes. Yeah, we don't want your solar scam. It's so dumb. 7 solar farms, wow. And this is a great place to have solar, by the way. The land is cheap, the sun is available. Nope, we don't want your solar panels. Screw your solar panels. That's a Biden Green New scam. Okay, Donnie. Okay. Okay. AM Dizzle. AM Dizzle's keeping the Dizzle going at 219. We've got the Qs just consolidating, chilling out just above that 59503 line. Tesla still at 424. Okay. Let's see. All right, let's see what else here. So, in global times, Powie Wowie's now about 35 minutes away. All right. I can put some headphones on here. See what's going on before we get into Powell here. Is Powell going to rug pull us today? Oh, no. We got our strategy already built out in the Alpha report. Yeah, actually, technically, you could join. Go read the Alpha report and see the strat. But we do this every day, and you get lifetime access to it if you join at meetkevin.com.
Of AI, the long-term productivity enhancements it is expected to deliver. There's still a lot of optimism that these companies will eventually see some pretty amazing returns from all the investments they're making. So certainly a lot of bulls, but also a lot of bears.
Ryan, there's a lot of headlines around Salesforce on the terminal today. Many positive, but the stock's down almost 2%. One I see that you filled with the team is that Salesforce has been cut at Northland. What's that analyst saying?
I believe he was discussing a lack of real growth acceleration from his Agentforce AI product. He's not seeing it showing up in CRPO, that's current remaining performance obligations. He's not seeing it show up in average revenue per user. Now, Salesforce does have its Agentforce event today. I haven't been able to monitor it, so we are hoping to see some new details, maybe about adoption, if they give any kind of insight into how much revenue growth they're seeing from this, overall adoption rates. I mean, that's all going to be very critical for the stock. But this is one of those software companies that has really been struggling this year, even amid all the AI optimism. There are a lot of software companies that have really been sort of struggling against the perception that maybe AI native companies, notably OpenAI, are these companies going to really represent some kind of competition to them that's very difficult to shake? So people looking to this event today really as an opportunity to help counter that narrative.
Bloomberg's Ryan Fostelika, thank you very much. Now, as Wall Street debates whether AI stocks are heading into bubble territory, Salesforce is doubling down on the technology. Dreamforce 2025 kicks off today, bringing together celebrities and tech leaders to explore the future of AI in the world of enterprise. Among the featured speakers, 11 Labs CEO Matti Stanislavski and Writer CEO May Habib, who will appear together on a panel titled Rewriting the Enterprise Playbook with AI. Pleased to say they both joined us now here in San Francisco. May, I'll start with you. You heard what Ryan just said. I know Writer to be an LLM-focused company, agentic AI-focused company for the enterprise. Either you beat Salesforce at that or you work with them at that. Which is it?
Yeah, what we do is help companies rewire operations to be AI native. And so partnerships with companies like Salesforce are a really important part of that. So it's definitely the partnership angle, but there is something to be said around doing things AI native and being able to start with a blank sheet of paper versus, layering on agentic into, a system of record that has existed for a while.
Yeah, you've kind of wanted to build it from the ground up, May, but I turn therefore to Matti, and when you're thinking about the audio applications of artificial intelligence, we've had you on the show to think about how now music can be created by just writing in a few key prompts. How are companies adopting 11 Labs appropriately with a return on that investment? Is it with a Salesforce or is it from the ground up?
Caroline, thanks for having me here. We've seen an incredible shift over last year where the combination of voice and conversational agents can elevate a customer experience for customers across Fortune 500 all the way to some of the highest scaling startups. We've seen both. We've seen companies built using some of the best in breed technologies, including voice, like you said, all relying on the entirety of the platform. We are thrilled to be here at Dreamforce, and as part of the work we do, be part of the voice for Agentforce, powering that work across their platform. So we've seen both, and across the enterprise segment, quick adoption in that sector.
May, we have loved how outspoken and clear you've been in pushing back on perhaps these narratives of 95% of all AI pilots aren't working when we think about the MIT report that really rocked the market. But it's about nuance in this conversation, May. So bring us that nuance of when is it working, when they're adopting Writer either from the ground up or indeed within Salesforce offerings?
Yeah, AI is not another software upgrade. You can't outsource it to the CIO and expect results. You know, a lot of what we do is go to executives and CEOs and say, look, this is about you. Sometimes you kind of want to shake them. Like, this has got to be a top-down, very heavy mandate to rewire processes end to end. If you leave it up to people, a lot of what they're going to be doing is personal productivity stuff with AI versus the high leverage things that executives certainly want. And as you've seen in terms of...
it's actually brilliant that she's saying that. I totally agree with her. I mean, to me, that's like exactly what we have with HouseHack. It's like the AI is trained by me from the top, because that's the point. It's like that's what we do with HouseHack. It's like, this is how Kevin identifies deals in real estate. So that's what the AI should. It's got to come from the top. I agree with that. That's why I think like this Agentforce stuff that Salesforce does, it's just bull crap, which they started talking about that too.
We actually do see adoption in the enterprise. So what does that tell you if the data for their product specifically isn't as strong?
Look, our focus is predominantly on working across our work at 11 Labs. And we've seen use cases across e-commerce, Elevate, where you suddenly can not only have customer support, you have a customer experience where users going into the product, going into the site, will be able to interact with agents to help you shop through the product all the way from the start. It's a good company, Immobiliare, one of the biggest in Italy, working on use cases like this. And we've seen this scale across wider degree of segments in financial services and technology and healthcare. What I think is true and key as we think about Salesforce, their distribution across clients, of course, stretches all types of industries, and including regulated industries. So it will take a slightly longer time to bring a lot of the technology into those industries where additional deployment, additional integrations to existing stack are slightly more complex to some of the companies in the space.
May, when you're both on stage with each other later today, what's kind of the one key thing you want to get across about what is happening among your enterprise customers at the moment? What you're fighting with each day, or what you're most focused on?
Yeah. We're hosts of Salesforce, right? They are wonderful partners, and I think a big part...
It says too uncertain to buy. It's not that there's like, it depends what you're buying. You know, if you're looking to buy in this market, this is not like what we had at the end of the Powell meeting in September. There were no catalysts then. You know, you have to remember now you got a lot of catalysts that you're dealing with. Tesla's doing really well right now. Look at this. You've got a little rocket ship there on Tesla. Somebody just hit the buy button, huh? Nvidia 182. Yeah, actually a little bit of a move to the upside here. Q's moving a bit to the upside as well.
When you're in the world of music, of IP, of real individuality and creativity.
For us, it's extremely important to work with the industry together. So our music is the first fully licensed AI music model at incredible quality, working with our research team. And that's the approach we've taken across voice, across music, as we build conversational agents. But like you say, AI is bringing change in a way that we've seen this across enterprise, across the companies we work with, is people using AI will be the people that will unfortunately replace people not using AI. So that adoption, both in the enterprise setting and across the wider global setting, it's all about being the user, trying it out, and bringing that to your work.
And May, when you come on, we've always been very keen to ask you about your growth trajectory, but also the haves and the have-nots in the space. How much you still having companies, smaller companies, call you up saying, hey, we'd like to team with you, we'd like to offer you, we'd like to have some sort of buyout. Are you seeing
I don't see anything on this Powell speech leak nonsense. And honestly, it doesn't really matter. It's usually the Q&A that matters. Like like they always post the speeches ahead of time. Like that's not a surprise. So I don't know how much that really matters.
And I think that's just getting harder for smaller startups to enter the enterprise as a result. You know, we were lucky in that we started building LLMs for the enterprise 5 years ago. And so a lot of our longstanding relationships, you know, have been a result of why we land new customers in these spaces. And I think that is just getting harder because of the hyperscaler investment. But there's just so many categories. The enterprise needs so much help, and people are not focused on it the way that startups can. So still a ton of opportunity, but yeah, absolutely getting harder.
And we love having both of you on to talk about that opportunity.
Yeah, we
We're
got
excited to hear
ADP
from
jobs
you.
numbers. That's usually the beginning of the month, so you're not going to get that again for like 2.5 weeks, you know.
Of course, the writer and 11 Labs. Coming up, Tara Hopkins, Global Director.
So again, Powell now expected in about 25 minutes, and so we'll obviously be covering this. And let's go ahead. I'm going to put the Powell speech in the title. Powell speaks. There we go. So we'll just update that. Now, Powell's speech, again, like, what do you expect him to say? He doesn't actually have much data, you know? So I mean, obviously we're going to watch it to see if there's any kind of shocker, but like, how shocking can it possibly be? Somebody in the chat writes, shutdown, new tariffs, and no data. Why buy? So Martin from New York City says, where is Kevin right now on the bear bull scale? Well, first of all, thank you for writing bear bull scale. Clearly pay attention. Go to meetkevin.com/data. So we are now posting the taco scale and the bear bull scale there. Meetkevin.com/data. By the way, I am on like day 3. Is it day 3 or 4? I think I'm on day 3 of doing of bringing the daily wealth back. A lot of you have really appreciated the daily wealth, and there was a period there we took a break, which was a mistake, but it's my fault. We got really busy with house hack. No excuses, Kevin. Stop making excuses. Don't be a weenie baby. Anyway, so that's really good. And if you want that, remember you could get it totally for free. You just download the Meet Kevin app. Like, seriously, it doesn't cost you anything. You download the Meet Kevin app. You get the data that I post, or you know, whatever. Let me put this in here, and we think it's very useful. So we'll put Powell speaks. Let's update that. Powell speaks. Cool. All right. So again, we're about 20 minutes away from Powell, and then the Qs are actually recovering very nicely right now. Look at this. You're down about 67 bips, but nice, slow, steady recovery here. Very cool. And Jaker, it's not $6,000. That's crazy, dude. It's a fraction of that. It's actually very affordable to the Meet Kevin Alpha report. For 8 courses and lifetime access, dude, it's a bargain. So let's see here. Somebody says, I hope he does not resign. He's not going to resign. Powell will not resign. Can you take your mic away from your keyboard? No, I actually point it like right at the keyboard to enhance the ASMR. People love it. Should we do a typing test again tomorrow together? While we wait for Powell? Well, we should make a bingo board is what we should do. I'll make a bingo board. So let's see here. Qs are rocketing right now. Very nice. Does that mean Bitcoin's gonna move with it? Let's see. Bitcoin should be. Yeah, slowly. This is on the 30-minute chart, so let's go to 1 minute. Yeah, there we go. There we go. Yeah, that's nice. So some nice enthusiasm coming before the good old Powell speak meeting. It'll be fun. So we'll cover that together. And then Powell will be up soon. Yeah, my favorite typing test, if you go to learn2type.com/typing, I think it's hyphen test. Yeah, there it is. This is my favorite. Everybody should try, like, it should be a thing where you do a typing test daily. I don't do typing tests daily, but I actually think that would be really fun if you make it a challenge. Let's see. A hare was very popular with the other beasts who all claimed to be her friends. But one day, oh, there should be a comma there. She heard hounds approaching and hoped to escape them by the aid of her many friends. So she went to the horse and asked him to carry her away from the, away from the hounds on his back, but he declined, stating that he had important work to do for his master. Test. Oh, come on, I could do better than that. Weenie! 111, adjust to typing speed with one mistake. Damn it. All right. It's fine. The sticks are going up, so it's a good thing. Nice recovery here. Good so far. We'll see. Like, Powell should be pretty neutral. Let's go do a bingo board. And, we're certainly... There's really no expectation, I don't think, by anyone that we're going to get some kind of, like, rug pull from Powell here. But I think you're going to get a lot of kick the can down the road. All right, let's make a blank PDF here. Let's insert our bingo board. And let's see where we got. Somebody says, this is a lame bear market rally. Well, I mean, the Qs are still down 60 pips. Or 50 or whatever, you know. Alright, albums. Go to faves. Alright, so what we'll need to get this going for the Powell meeting that starts soon. Alright. I can't find the damn thing. You know, they made it so hard to find photos in this new Photos app. I don't know, it's been out for like a year now with Apple, but boy, compared to the old one, maybe I'm turning into like the boom. It's just ridiculous. All right, I figured it out. All right. Nobody knows how to figure it out quite like we do. Okay. So I'm going to write down as part of the bingo board, no rug. So we're going to go for no rug. No rug. Okay. Then we're going to go, it's very important to maintain, inflation expectations. Maintain inflation expectations. That's going to be the most important thing. I don't think we're going to get a rug. Maintain inflation expectations, without the data. I think Powell will probably say, like, the labor market is not falling off a cliff yet. So let's say, not falling off labor cliff. I also think he's going to downplay the BLS data. So, like, hey, we have other sources. Downplay BLS. We have other data. He'll say something like that. I think you'll also get a Powell. I mean, obviously, we'll throw a freebie in here. Purple tie. That'll be pretty straightforward. I think there's some people who are really excited that, like, bonds, are going to rally and yields are going to come down. I would actually be more guessing that Powell's going to talk up yields. So I would guess yields up. And probably stonks. Yeah, I don't think there's a rug pull here. So, maybe, probably just stonks slow up. Because I think he's going to talk about how the economy's fine. Economy, resilient, he'll talk about this. It's all fine until it falls off a cliff, right? So what you're really, like, this could be our concerned column over here. We'll make a concerned column. So I'll call this the concerned column. That'll be CC, the concerned column. This would be where he would talk about any kind of weakening. So additional labor weakening, right? This is where he could also talk about we can act fast if needed, but there's no rush now, right? So probably see that. No rush to cut fast now. No rush for now. So we'll call this the bullish side bullish. This will be bullish GDP, right? That's the bullish GDP column. And then we've got the concerned column, which is additional labor weakening, we can act fast if needed. I don't think you get a rug. Probably, I do think you'll see some higher for longer commentary because of China. Higher for longer. Obviously, we're going to be data dependent. And then China issue, risks, inflation, persistence. And so therefore we'll have to wait and see. Okay. Let's see. Somebody writes, cuts still coming, wear a construction jacket. Yeah, he's not gonna wear a construction jacket. And yeah, he'll get asked about cuts. We're not wrong about that. Let me see here. Let's go to the world interest rate probabilities. So we're looking at pretty much a 96.7% chance of a cut. So in October. So, appropriate to cut. I think I'll say appropriate to cut maybe. Oh, wow. The market's fully pricing in a second cut. Oh, that's very interesting. He might reiterate the SEP. Reiterate SEP 2 cuts. That's bullish. All right. Oops. Come on. Bullish. And then, I don't see a rug. Like, he's not really going to be talking about hikes at this point. No talk. I'm still going to write that down. No talk of hiking. Okay. Asked about his replacement. He's not going to talk about that. He might get asked about it. But replacement, no comment. We could write it down. Replacement, no comment. So he might actually talk about the deflation in oil, right? Deflation in oil as geopolitics slow equals good, right? Welcomed, he might say. Welcomed. Reduction in oil prices, that would be welcomed. That'll help with inflation as well. No rush, economy is resilient. Yields up, no rush for now. We want to get closer to neutral. We want to get closer to neutral. Closer to neutral. Want to get closer to neutral. We got the 2 cuts part to be reiterated. Then, we saw that about Hassett, Warsh, and Waller. I think Hassett will be the biggest shill, which is probably what makes, unfortunately, Hassett the most likely to get it. I actually think Myron would be a better choice. Not only Myron, but you've got Waller's pretty with it. Hassett, kind of an embarrassment for the Fed, honestly. I don't know. Maybe I'm too bearish. Maybe we'll grow to like him. It's possible. We'll know his POV, that's for sure. Shit. Okay, cool. Let's see what else you guys got in the comments here. The new tariffs, the China issue risk inflation persistence, right? They don't want inflation to become more persistent. That's the risk. That's just the biggest risk right now. So that's why they have to be aggressive. Must sound convincingly aggressive on inflation. They have to sound badass on inflation. That's their job. Which again is why, you know, you probably end up seeing yields up, right? Restoring price stability will take some time. No recession unless you squint. How do you think USD will react? Well, I mean, I think the USD moves with yields. So if you see yields up, then USD up. Right? So if you're a currency trader, just look at the yields. You know, to me, I mean, yeah, it's funny. In the Alpha report this morning, I said 4.05 on the 10-year, and now we're there. We actually did end up moving up because we were down at like 4.03. Now we're at 05 again. It's not a surprise. The only way you really get this to go down, I'll write this down. Let me make a minute. Yields only down. Yields down if Powell turns dovish. Powell goes dovish. However, that would also be a warning to the market, or like to the. I mean, the market might cheer more the potential for more rate cuts, but it would be a fool's errand because it'd be like, uh-oh, you know, they're seeing something. I don't actually think that. I think there's maybe a 10% chance. So I'll write down that there's a 10% chance he goes dovish. So I'd call it 90% neutral is going to be my take. And then a couple more boxes to go. Let's see here. Maybe we go valuations are elevated. He might say that. Valuations elevated. And then we got one more to fill in. Let's give us no rush for now. Want to get closer to neutral. We can act fast if we need to. Data dependent. We pretty much got everything. Dovish. Did I say no hike? No talk of hiking. Yeah, we got that. And yeah, I need like one more thing here. Wait and see. Consensus. He might talk up consensus. Do we care about that? Oh yeah, I think that's fair. Let's go consensus. Consensus at board. You know, wait and see, basically. Which that'll end up making them too late. But anyway, all right, we did it. Good afternoon. I guess technically it will be afternoon. All right. So, Powell begins in about, what, 5 minutes now? Powie wowie. Let's get rid of my typing test here. That's it. From now on, we will do daily typing tests. No. We are waiting. We are waiting for Bowie Wowie. Bowie Wowie is coming. The Fed put a feed up yet? I know AP has a feed. Federal Reserve, I don't think so. Nope, just AP. Alright, that's fine. And then you do have... Okay, I will cover that. Okay, good. Cool. So we are now on standby for Powie Wowie. Let's see what we got over here.
A number of top Wall Street firms reporting this morning. We'll break down those numbers. Plus, we're awaiting comments from
Sarah's on
Federal
CNBC.
Reserve Chair Jay Powell, who will begin speaking in about 20 minutes from now.
20 minutes? They said 05. That's bullcrap.
Are there, as you see, for the hour as well. We're also monitoring Fed Chair Powell because he's going to be speaking this hour as well. We'll bring you the headlines, and
supposed to be
you'll hear the
9:05.
Q&A once that begins. We do have a turnaround in the markets, and I think that's where we'll start today. Look at the Dow. It's now positive by almost 0.5%, just shy of that. S&P and the NASDAQ have a little bit of work to do, but nonetheless, the picture looks pretty different than what it did earlier this morning. Shan, I'll begin with you.
No, we opened up quite red. All right. So it now says 12:20. All right. Well, whatever. 19 minutes it is then. 19 minutes. I saw a schedule earlier that had him at 9:05, but whatever. No problem. Somebody here writes, the bubble in gold could get even bigger as it doesn't look like there are many obvious major sellers on the horizon. Central banks and private investors have been the main drivers of the rally so far, but it's not obvious why either should start selling now. I agree with that. Really, you don't sell it until the recession starts. That's when you get the peak. The peak! But until then, I mean, you probably just keep rallying. It's crazy. I mean, if you get some really trash jobs data, you could probably get 5,000 gold. All right. So okay. What else? Oh yeah, there were a lot of people circulating this, and it's just amazing to me. This guy, JP Morgan, will invest $1.5 trillion into 27 critical industries in America. And it's just some dude like shilling, I don't know, Trump or MAGA or whatever. I'm like, bro, are you kidding me? JP Morgan Chase launches $1.5 trillion security initiative. This is lending, bro. JP Morgan's gonna invest 10 bill. Which is 2/3 of 1% of the headline. The rest is lending. It's not an investment by JP Morgan. It's an ad for people to borrow from JP Morgan. This is just classic. Classic. All right. So what else here? Alex Jones. $1 billion defamation case rejected by top court? What does that mean? The Supreme Court is denied to review and overturn. Oh, okay. Supreme Court rejects Alex Jones. Yeah, all right. Well, sucks to suck. All right. Let's take a look at some other commentary here. All right, what do we got over here? Asmong is going off again about Donnie T. Let's see here. Trump 2028. While we wait for Powell. Powell's what, like 15 minutes away now? All right. So while we wait for Powie Wowie, Asmon is telling us that Trump is going to be president in 2028. Let's listen to it, see what he says.
Comments about Trump running for a third term. People thought it wasn't going to happen, but
Trump has like so far openly rejected the idea of fully rejecting Trump 2028.
I don't know. Look, let me see here. Bannon third term.
Oh no.
Take a look. He's too old. Well, here it is, and this is him talking about it again. And if there's a new one, yep, here's the new one.
So let me ask you about Trump 2028. We have a 22nd Amendment, which bars anybody from running for a third term.
Big problem.
Do you think that that's not a barrier for him, or how do you see that?
I think that there are many different alternatives that at the appropriate time after the midterms.
Please keep eating. Just going to make a few quick opening.
Hold on. The NAB guy is yapping in the background. Ruined my shot! Frickin' NAB guy. Yeah, because this is where Powell's about to come out. So, let me just make sure I mute that. Thanks, bro. Blow up my frickin' mic. Why do we even listen to Bannon?
We will roll out, but I think there are many different alternatives to make sure that President Trump is on the ballot. And if he's on the ballot, he'll win.
So
Man.
I reacting to Bannon, it's just not even worth it. It's just not even worth it. It's just not credible at all. Not worth it. All right, waiting for Powell. And this is the Powell event.
It's either one of you or many of
Oh
you
my
with
gosh.
a little bit. The donations help fund scholarships, mentoring, and research.
Donate! Donate while everybody's waiting for Powell. Donate is what he says. Oh, yeah. Yeah, exactly. Somebody writes, who cares what Bannon says? Exactly. So, while we wait for Powell Wowie, which is now the Powell Wowie's 14 minutes away.
Just close the fucking door. Close the door.
Oh, sounded like Powell. Let's review again the bingo board. So the bingo board today is on the left side we got bullish GDP, yields up, stocks slowly up, economy is resilient, no rush for now, and we want to get closer to neutral. All right, this is the base case. This is what we expect. Not a big deal. No talk of hiking, no rug pull. He's going to sound convincing on inflation. There's consensus at the board. No comment on my replacement. Deflation in oil is welcomed news. Valuations are elevated. He's going to wear a purple tie. Yields down if Powell goes dovish. But he's not going to go dovish. He's going to go neutral. There's a 90% chance he goes neutral here. Additional labor market weakening. But we could cut quickly if we need to. China issue risks inflation persistence, and so we want to prevent inflation persistence. Okay. Then you've got wait and see, reiterate the SEP, data dependent, higher for longer. We have other data, not falling off the labor market cliff, maintain inflation expectations. All right. So that's what we're looking for. And we're hopeful that this is just nice and chill. No craziness. Yeah, we'll see. Let's look at the event here. Did they kill his mic? Yeah, this guy looks thoroughly confused. Oh, a plaque. Let's hand out plaques and awards. Who's this guy? Oh, who are these people? Hand out awards. Bring out Powell, will ya? Where's Powell? Powell Wowie. We don't care about this. We want Powell. We want Powell. Somebody writes, White House confirms Trump still meeting with China. Yeah, the thing is, that's their goal that they're stating that. But what if Xi Jinping doesn't want to meet with Trump? You know, there are two sides to this. So it's quite interesting if you think about it. Oh, hey, who's this?
Before we move on to our lunch, the rest of our lunch program, I am going to take a moment to recognize 4 outstanding members of the NABE board.
Dude, she looks just like Kathy Wood, but it's not. I just out of the corner of my eye, I'm like, what, is Kathy here? No, dude. Looks just like her. I don't know, maybe I'm missing something. Yeah, whatever. It's like a doppelganger. Like her chin's different and her voice is different, but holy smokes, dude. That is a doppelganger. I'm gonna take a screenshot of that. Oh man, dude. Yeah, this is Catherine Woodian. Dude, that is a legit doppelganger. Like, if you listen, she sounds different.
Of the Tech Economics Conference, helping it evolve as we've incorporated causal inference and AI tools into our collective tools.
This is, wow, man, body double, yeah. Whole demeanor looks like, I know, that's why I'm like, what? That was scary. I was like, what? What is Kathy Wood doesn't like Jerome Powell. I'm like, what is she doing opening for Jerome Powell? Kathy Wood is known for openly disliking Powell, suggesting Powell is too aggressive and he's definitely going to be too late and he's hurting the tech stocks that need lower interest rates to survive, especially the money losers. So seeing this lady walk out to open for J-Pow, I'm like, what? No way. But it's just a doppelganger. It's not Kathy. Different chin structure, voice sounds different.
Yale's deep network and international perspective have been invaluable in broadening NABE's reach, and fostering meaningful...
Scary, though. Uncanny resemblance to Kathy Wood. Wow. All right. Let's go listen over here while we wait.
In First Brands, it is the agent of the ABL facility.
Timu Kathy.
Holding themselves in that facility. So we would expect something from them.
Okay, it feels like this is the story that keeps giving, because even though everyone wants to sweep it aside, it comes up time and again, and it's probably not going to be going away anytime soon. Gentlemen, and Irene, thank you so much for joining us. Sri Natarajan, Neil Sipes, and Irene Garcia Perez here for our roundtable on the banks and some of the credit issues that we're all facing. Now, coming up on Bloomberg Markets, President Trump is hosting Argentina's President Milei at the White House today. Our reporting from Washington and Buenos Aires is up next. This is Bloomberg.
Yeah. All right. Soon, my friends. Soon. All right. Okay. What else? Next up, we have Powell. 7 minutes. 7 minutes to Jerome Powell. It's all right. You know, when Powell comes out, we're going to have to test the breaking news sound effect. Have I played the breaking news sound effect yet? Does it work? Jerome Powell will be out in the next 6.5 minutes to talk about inflation not becoming persistent, being ready to act should he need to, consensus amongst the board, 2 interest rate cuts. And that's it. Okay. That's one game of pest control. Yeah. News you could use. Somebody says Halo voice, please. What Halo voice?
Fetch me. This is not personalized financial advice. Coupon code expiring soon. Coupon linked below. Email staff@meetkevin.com. Big PP.
I have more.
Poopy doopy.
I don't know if you want more. Oh, yeah. All right. So, next, we're just chilling out right now. We are looking at, we got here. Bitcoin had a little bit of some enthusiasm. Little bit of enthusiasm. Maybe we can update the bull-bear scale after, or bear-bull scale. You gotta say it correctly. See, even I screw it up. You can now get the bear-bull scale for free at meetkevin.com/data. Meetkevin.com/data. And if you go to it, the first thing you see is a pitch for the Meet Kevin membership, because of course, there's gotta be an ad. Anyway, you join now. Rumor is the ads go away and you never hear the pitch again once you join. Tax deductible, potentially. But anyway, we're at a 4.3 out of 10 right now on the bear bull scale. The arrow's got to get moved a little bit, but whatever. And the taco scale is doing really well. I think the taco scale is helping us prop up markets today. Prop it up, baby. Prop it up. Somebody said, okay, let's see. Then we have, the Q's almost 600. Psychological reject right at 600. That's almost like the psychological reject on MP material at 100. Did hit the target, though. And NVIDIA keeps melting up. Is it tax deductible? You know, the way to look at it is you don't need an LLC to write off things on your taxes, because you can have self-employment income that goes directly onto your 1040, and there are costs associated with that. Costs associated with the education for investing or otherwise. Obviously, you should always, talk to your CPA about that perspective. But typically, investment-related expenses are write-offs. So, for example, you buy a course to help you analyze real estate wedge deals, and then you go buy a rental property. That might be part of your cost to acquire that rental property. Those are things you gotta talk to your CPA about that. And mostly because everybody's personal tax situations. That's probably like one of the most personal things is someone's tax return. What a mess. So let's see here. Somebody else writes meat hack. Yeah, these, the mining plays are all vogue right now. I see somebody talking about it. They will bleed out over time. Unfortunately, likely they will bleed out substantially because the revenues are going to take, honestly, a decade for these people to really start cranking money. And it's unfortunate, but it is what it is. And people are going to get impatient. The euphoria now and the momentum is fantastic, though. People love that. So, all right. Let's get ready for Powie Wowie. Remember, you could use coupon code SHUMASIESTA and join the Meet Kevin membership. You get all 8 courses, the new lectures we're posting. You get, and we're getting ready for Powie. Did I just see, what's going on here? Oh, here we go. Did they cut the mic?
Right here.
Oh.
Here we go.
Oh, Powie Wowie's getting an award. We got purple tie, boys and girls. Purple tie, purple tie. Wait. Kathy Wood and J Pow taking screenshots. It's not actually Kathy Wood, but I think it's hilarious. Because she don't like J Pow.
Thank you so much.
Oh, here we go. Future path of monetary policy, data driven. No risk-free path. Risk to job market justifies September rate cut. Downside risks to the market have risen. Current Fed policy toolkit operating well. We'll be discussing the balance sheet.
Thank you, Emily. And thanks to the National Association for Business Economics for the Adam Smith Award. It, for me, is an unexpected honor just to be mentioned alongside many of your past recipients, including particularly my predecessors, Janet Yellen and Ben Bernanke. So thank you very much for this recognition. I will say, on a more personal note, I have greatly enjoyed my regular visits to your annual meeting and your conferences. It's really been my favorite venue all these years. It's a place.
Oh. What's going on?
This is a place where we can talk about economic issues and not worry
what the hell was
that
that?
Eyes might glaze
you having a heart
over.
attack?
I also appreciate the warm welcome I've always received here. And putting Fed staff aside for a minute, I can't think of a more lovable group of econ nerds anywhere.
Yep.
So thank
U.S.
you
Central
again
Bank has other
for
data
this
beyond government sources.
Prestigious award. And for the opportunity to speak to you here today. So, as we all know, monetary policy is more effective.
Let's get a
when
better
the public
quality feed
understands
here.
what the federal and putting Fed staff aside for a minute, I can't think of a more lovable group of econ nerds.
No, this is behind though.
Policy, the Federal Reserve's balance sheet. A colleague recently compared this topic to a trip to the dentist, but I found that comparison somewhat unfair to dentists. So today I'll discuss the essential role that our balance sheet played during the pandemic, along with some lessons learned. I'll then review our ample reserves implementation framework and the progress we've made toward normalizing the size of our balance sheet. And I'll conclude with some brief remarks on the economic outlook. So, One of the primary purposes of a central bank is to provide the monetary foundation for the financial system and the broader economy. This foundation is made of central bank liabilities. On the Fed's balance sheet, the liability side of the ledger totaled $6.5 trillion as of October 8, and three categories account for roughly 95% of the total. First, Federal Reserve notes, that is physical currency, totaled $2.4 trillion. Second, reserves, funds held by depository institutions at Federal Reserve banks, totaled $3 trillion. These deposits allow commercial banks to make and receive payments and meet regulatory requirements. Reserves are the safest and most liquid asset in the financial system, and only the Fed can create them. The adequate provision of reserves is essential to the safety and soundness of our banking system, the resilience and efficiency of our payment system, and ultimately the stability of our economy. Third is the Treasury General Account, or TGA, currently at about $800 billion, which is essentially the checking account for the federal government. When the Treasury makes or receives payments, those flows affect dollar for dollar the supply of reserves or other liabilities in the system. The asset side of our ledger consists almost entirely of securities, including $4.2 trillion of U.S. Treasury securities and $2.1 trillion of government-guaranteed agency mortgage-backed securities, or MBS. When we add reserves to the system, we generally do so by purchasing Treasury securities in the open market and crediting the reserve accounts of the banks involved in the transaction with the seller. This process effectively transforms securities held by the public into reserves, but does not change the total amount of government liabilities held by the public. So, the Fed's balance sheet serves as a critical policy tool, especially when the policy rate is constrained by the effective lower bound, or ELB. When COVID-19 struck in March 2020, the economy came to a near standstill and financial markets seized up, threatening to transform a public health crisis into a severe, prolonged economic downturn. In response, we established a number of emergency liquidity facilities. Those programs, supported at the time by Congress and the administration, provided critical support to markets and were remarkably effective in restoring confidence and stability. At their peak, in July 2020, loans from these facilities totaled just over $200 billion. Most of these loans conditions stabilized. That's normally the deepest and most liquid market in the world, and the bedrock of the global financial system was under extraordinary pressure and on the verge of collapse. We used large-scale purchases of securities to restore functionality to the Treasury market. Faced with unprecedented market dysfunction, the Fed purchased Treasury and agency securities at an extraordinary pace in March and April of 2020. These purchases supported the flow of credit to households and businesses and fostered more accommodative financial conditions to support the recovery of the economy when it ultimately came. This source of policy accommodation was particularly important as we had already lowered the federal funds rate close to zero and expected that it would remain there for some time. By June 2020, we slowed our purchase pace to a still substantial $120 billion per month. And in December of 2020, as the economic outlook remained highly uncertain, the FOMC said that we expected to maintain that pace of purchases until substantial further progress has been made toward
They are setting up to start announcing that they're going to stop balance sheet runoff, which is bullish. It's stimulative.
Withdraw support while the economic recovery remained fragile amid unprecedented conditions. And we maintained that pace of asset purchases through October 2021. By then, it had become apparent that elevated inflation was not likely to go away without a strong monetary response. At our meeting in November 2021, we announced a phase-out of our purchases, and at our next meeting in December, we doubled the pace of that taper and said that asset purchases would conclude by mid-March of 2022. Over the entire period of purchases, our securities holdings increased by $4.6 trillion. So, a number of observers have raised questions, fairly enough, about the size and composition of asset purchases during the pandemic recovery. Throughout 2020 and 21, the economy continued to face significant challenges as successive waves of COVID caused widespread disruption and loss. During that tumultuous period, we continued to purchase in order to avoid a sharp, unwelcome tightening of financial conditions at a time when the economy still appeared to be highly vulnerable. Our thinking was, was informed by recent episodes in which signals about reducing the balance sheet had triggered significant tightening in financial conditions, and we were thinking of the events of December 2018, as well as the 2013 taper tantrum. Regarding the composition of our purchases, some have questioned the inclusion of agency MBS purchases given the strong housing market during the pandemic recovery. Outside of purchases aimed specifically at market functioning, MBS purchases are primarily intended, like our purchases of Treasury securities, to ease broader financial conditions when the policy rate is constrained by the effective lower bound. The extent to which these MBS purchases disproportionately affected housing market conditions during that period is challenging to determine. Many factors affect the mortgage market, and many factors beyond the mortgage market affect supply and demand in the broader housing market. With the clarity of hindsight, we could have, and perhaps should have, stopped asset purchases sooner. Our real-time decisions were intended to serve as insurance against downside risks. We knew that we could unwind purchases relatively quickly once we ended them, which is exactly what we did. Research and experience tell us that asset purchases affect the economy through expectations regarding the future size and duration of our balance sheet, so that when we announced our taper, market participants began pricing in its effects, pulling forward the tightening in financial conditions. Stopping sooner could have made some difference, but not likely enough to fundamentally alter the trajectory of the economy. Nonetheless, our experience since 2020 does suggest that we can be more nimble in our use of the balance sheet and more confident that our communications will foster appropriate expectations among market participants, given their growing experience with these tools. Some have also argued that we could have better explained the purpose of asset purchases in real time. There's always room for improved communication, but I believe our statements were reasonably clear about our objectives, which were to support and then sustain smooth market functioning and to help foster accommodative financial conditions. Over time, the relative importance of those objectives evolved with economic conditions, but the objectives were never in conflict. So at the time, this issue appeared to be a distinction without much of a difference. That's not always the case, of course. For example, the March 2023 banking stress led to a sizable increase in our balance sheet through lending operations. We clearly differentiated these financial stability operations from our monetary policy stance. Indeed, we continued to raise the policy rate through that time. Turning to my second topic, our ample reserves regime has proven highly effective, delivering good control of our policy rate across a wide range of challenging economic conditions while promoting financial stability and supporting a resilient payment system. In this framework, an ample supply of reserves ensures adequate liquidity in the banking system, and control of our policy rate is achieved through the setting of our administered rates, interest on reserve balances, and the overnight repurchase rate. Reverse repo rate, rather. This approach allows us to maintain rate control independently of the size of our balance sheet. And that's important given large unpredictable swings in liquidity demand from the private sector and significant fluctuations in the autonomous factors affecting reserve supply, such as the TGA. This framework has proved resilient whether the balance sheet is shrinking or growing. Since June 2022, we've reduced the size of our balance sheet by $2.2 trillion, from 35% to just under 22% of GDP, while maintaining effective interest rate control. Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. Some signs have begun to emerge that liquidity conditions are gradually tightening, including a general firming of repo rates, along with more noticeable but temporary pressures on selected dates. The committee's plans lay out a deliberately cautious approach to avoid the kind of money market strains experienced in September 2019. Moreover, the tools of our implementation framework, including the standing repo facility and the discount window, will help contain funding pressures and keep the federal funds rate within our target range through this transition to lower reserve levels. Normalizing the size of our balance sheet does not mean going back to the balance sheet we had before the pandemic. In the longer run, the size of our balance sheet is determined by the public's demand for our liabilities, rather than by our pandemic-related asset purchases. Non-reserve liabilities currently stand about $1.1 trillion higher than just prior to the pandemic, thus requiring that our securities holdings be equally higher. Demand for reserves has risen as well, in part reflecting the growth of the banking system and the overall economy. Regarding the composition of our securities portfolio, relative to the outstanding universe of Treasury securities, our portfolio is currently overweight longer-term securities and underweight shorter-term securities. The longer-run composition will be a topic of committee discussion. Transition to our desired composition will occur gradually
Bullish
and
TLT.
predictably, giving market participants time to adjust and minimizing the risk of market disruption. Consistent with our longstanding guidance, we aim for a portfolio consisting primarily of Treasury securities over the longer run.
Ooh, bullish real estate.
Some have questioned whether the interest we pay on reserves is costly to taxpayers. In fact, that is not the case. The Fed earns interest income from Treasury securities that back reserves. Most of the time, our interest earnings from Treasury holdings more than cover the interest paid on reserves, generating significant remittances to the Treasury. By law, we remit all profits to the Treasury after covering expenses. And since 2008, even after accounting for the recent period of negative net income, our total remittances to Treasury have totaled more than $900 billion. While our net interest income has temporarily been negative due to the rapid rise in policy rates to control inflation, this is highly unusual. Our net income will soon turn positive again, as it typically has been throughout our history. Of course, having negative net income has no bearing at all on our ability to conduct monetary policy or meet our financial obligations. If our ability to pay interest on reserves and other liabilities were eliminated, the Fed would lose control over rates. The stance of monetary policy would no longer be appropriately calibrated to economic conditions and would push the economy away from our employment and price stability goals. To restore rate control, large sales of securities over a short period of time would be needed to shrink our balance sheet and the quantity of reserves in the system. The volume and speed of these sales could strain Treasury market functioning and compromise financial stability. Market participants would need to absorb the sales of Treasury securities and agency MBS, which would put upward pressure on the entire yield curve, raising borrowing costs for the Treasury and private sector. Even after that volatile and disruptive process, the banking system would be less resilient and more vulnerable to liquidity shocks. The bottom line is that our ample reserves regime has proven remarkably effective for implementing monetary policy and supporting economic and financial stability. So I will close with a brief discussion of the economy and the outlook for monetary policy. Although some important government data have been delayed due to the shutdown, we routinely review a wide variety of public and private sector data that have remained available. We also maintain a nationwide network of contacts through the reserve banks who provide valuable insights, which will be summarized in tomorrow's Beige Book. Based on the data we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago. Data available prior to the shutdown, however, show that growth in economic activity may be on a somewhat firmer trajectory than expected. While the unemployment rate remained low through August, payroll gains have slowed sharply, likely in part due to a decline in labor force growth due to lower immigration and lower labor force participation. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. While official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue their downward trajectories. Meanwhile, 12-month core PCE inflation was 2.9% in August, up slightly from earlier this year, as rising core goods inflation has outpaced continued disinflation in housing services. Available data and surveys continue to show that goods price increases primarily reflect tariffs rather than broader inflationary pressures. Consistent with these effects, near-term inflation expectations have generally increased this year, while most longer-term expectation measures remain aligned with our 2% goal. Rising downside risks to employment have shifted our assessment of the balance of risks. As a result, we judged it appropriate to take another step toward a more neutral policy stance at our September meeting. There is no risk-free path for policy as we navigate the tension between our employment and inflation goals. This challenge was evident in the dispersion of committee participants' projections at the September meeting. And I'll stress again that these projections should be understood as representing a range of potential outcomes whose probabilities evolve as new information informs our meeting-by-meeting approach to policymaking. We'll set policy based on the evolution of the economic outlook and the balance of risks rather than following a predetermined path. And with that, thank you again for this wonderful award and for inviting me here today. I look forward to our discussion. Thank you.
It is bullish so far. Here's my cheat sheet so far, my bingo board. They're going to get into Q&A now. We got the purple tie, no rush for now. Economy's resilient, stocks slowly up, no talk of hiking, no rug pull. We actually got basically talk about, you know, it's not QE, but it's turning the vacuum cleaner off, which is bullish.
Excellent remarks in the Adam Smith address, and we will have about half an hour for questions. So
sounds like a long time.
Should have talked longer. So
Powell's bearish
let me
that.
start with, before I go to some of the questions
He's
coming
so
from the
done.
audience, and do
He's
use
like, I just want to
the
retire.
Connect app to generate those. You
Dude, he
have
doesn't want to
said,
be
and we
there.
repeated again here, that there are no risk-free paths for the Fed now. So in light of that, and in particular, with where the recent inflation data are running, let me group this with some of the questions that we're seeing coming in on the app as well. Obviously, always data dependent. But thinking about the dual mandate of maximum employment and price stability, how concerned are you that if the rate of pass-through of tariffs is slower, that might begin to look like more persistent inflation, as opposed to a one-time, as if the tariff adjustment came through all at once, and then it would be quite clearly a one-time price level shift?
So that's certainly a risk. You know, as I mentioned, there really isn't a risk-free path now, since it appears that inflation certainly is running above our target and appears to be continuing to increase quite gradually, but increase. It's still on the way up. So there's a risk.
It's not Kathy Wood, I know.
Persistent.
It's a doppelganger.
Now, the labor market has demonstrated pretty significant downside risks as payroll jobs have declined, and both the supply and demand for labor has declined quite sharply. So, those two states of affairs for our two goal variables, call for different monetary policy responses. So, as they come more into balance, I think the idea has been that policy should move from being tight to some degree to being more neutral as those two things balance out. But it is clear, though, that if we move too quickly, then we may leave the inflation job unfinished and have to come back later and finish it. If we move too slowly, there may be unnecessary losses, painful losses in the employment market. So we're in the difficult situation of balancing those two things. I think for the last few months, we've been able to maintain a restrictive stance because the labor market was still pretty solid. I think that the data we got right after the July meeting showed that, which adjusted back all the way through May, showed that the labor market has actually softened pretty considerably and puts us in a situation where the two risks are closer to being in balance.
Let's move to the other risk then and talk about employment a little bit. We had Anna Paulson here yesterday, and she spoke about the break-even unemployment or break-even employment growth rate. And that's a question from the audience as well. So I believe she said that it's certainly lower than it was, and the standard error around those estimates probably includes some numbers that might even be negative. Where do you see the monthly break-even employment growth rate at this point?
I'm not going to try to give you a pinpoint number, but
fine.
As you pointed out, the standard error around these things is 50,000 plus or minus, something like that. And that would certainly, I think the range of plausible numbers for the break-even rate
0 to 50
is probably does go below zero, accounting for those standard errors. It's clearly come down a great deal, and that's what's so challenging about this is that both supply and demand in the labor market have come down so sharply, so quickly. And the fact that the unemployment rate has barely moved is kind of remarkable in and of itself, and suggests that they're moving at roughly the same pace, although, of course, the unemployment rate has ticked up, which suggests that demand is moving a little faster than supply. I wouldn't want to point to a specific number other than to say that it's come way down. And there are many, many estimates out there. By the way, there are many ways to calculate it, so you're going to get different estimates.
Yeah.
We're certainly in a volatile and changing environment. So one question I have is whether you see any changes in the transmission mechanism of monetary policy actions. So when we speak of long and variable lags, as we do, are those changing? And in particular, do you think there might be any difference in the impacts of policy on inflation versus employment? Is one changing more than the other?
That's like 2 or 3 questions, so I might have to come back to you. That's right.
Dude, he's so done.
So on transmission,
he just wants to retire.
There, in theory at least, I see 2 things. One is, what we say and the actions that we take on monetary policy and how quickly that gets into financial markets. So if you go back to when I was in college, that part would have taken weeks, months probably. And now that part happens essentially instantaneously.
If it's not clear to you, he is more dovish than neutral. He is leaning dovish here, which means yields up, stock down. Sorry, yields down, stock up. Yields down, stock up.
I think that's more dependent on the conditions in the economy. For example, if you take the group of people who had extremely low rate mortgages, right? And even so, if you can cut rates, but they're a long way down, and they're sort of in a place where it's going to be expensive to move and to take out a much higher rate mortgage, even assuming significant numbers of cuts. So that has probably blunted the transmission of lower rates into that part of the economy. But overall, I think it still works the way we think it works, which is, long and variable lags means a lot of uncertainty about how it's being affected. I think the last part of your question, the lore has been that inflation and employment come later. The first decisions are purchasing decisions, hiring decisions, and things. Well, purchasing decisions, can be affected probably more quickly. But then those would eventually affect employment and inflation. So longer lags are the research generally shows longer and longer lags for employment and inflation.
And I guess the variable part of that comment does give us a bit of cover.
A lot of uncertainty.
So you spoke about the adjustments or the challenges that you're facing with some government data not currently being published. Beyond the headline unemployment rate, which we're not going to see right away, what other labor market indicators are you monitoring most closely to gauge that side of the mandate?
So I think everyone's looking at the same non-government data. So there's a set of non-government data around, or non-federal government data around labor markets. For example, state level unemployment, claim reports. You can add those up and get a pretty decent estimate, and that's a really good one. There's also ADP has its data and employment. So in the employment space, there's some plausible data. I will say generally the private data, the alternative data that we look at is better used as a supplement for the underlying governmental data, which is the gold standard. And it won't be as effective as the main course as it would have been as a supplement. So we don't expect that we'd be able to replace the data we're not getting. So I think in job, in employment space, there's some pretty good substitutes, less so in inflation space and in economic activity space. And also they're just, there are different private data providers use different universes and different levels of rigor in their data analysis. So we're looking at lots of things, and we're going to make our decisions according to the FOMC schedule. But I think it will be a lot better once we start getting, for example, the September employment report is going to be a very important report. And we're not on track to have that. There would still be time for us to get that. We will get, of course, the September inflation, the CPI and PPI reports. So that's a positive. But we don't comment on fiscal matters. But from our standpoint, we'll start to miss that data, and particularly the October data. If this goes on for a while, they won't be collecting it, and it could become more challenging.
You used the term gold standard, and you didn't mean it in this context, but I'm going to pivot here because there's a question from the audience that's getting a lot of upvotes. So one of your predecessors, Alan Greenspan, used to view the price of gold as an indicator of inflation risk. So in that context, how do you view the rally that we've seen in gold? And if you want to throw in Bitcoin, you can comment on that too.
I'm not going to comment on any particular asset price, including that one. And I think we think of inflation as driven by fundamental supply and demand factors, and it's not something we look at actively.
Fair. The September projections, we saw revised GDP growth projections revised upward for both 2025 and 2026. Now, sometimes it's just an issue-to-issue thing, but how do you reconcile that projection of stronger growth with what we're seeing in terms of a likely weakening labor market?
So even subsequent to the September SEP, we've seen economic activity data which are surprising to the upside. And as I mentioned in my remarks, so you do have a bit of a tension there between the labor market data that we see, very low levels of job creation, and yet people are spending. So economic activity is strong, and it's we're going to have to see how that plays out. Right now, of course, we're not getting any new government data on that, any new federal government data on that, but it does create. Of course, if economic activity were stronger, then that would tend to support labor market activities and hiring, so we'll have to see how that works out.
Another topic that has permeated the conference over the last 2 days has been AI. So as the Federal Reserve, like all of us, grapple with the implications of generative AI, what plans are in place to assess its long-term impact on productivity, implications for labor markets, and overall economic stability? And does that present any new risks to monetary policy or financial stability?
So you're right. We're doing what other people are doing, which is reading all the things that, so many researchers are working on AI now. It's just amazing. And so we follow all of that. We also have people at the Fed who are doing lots and lots of research on AI. And, in terms of, it's just such early days to be looking for the kind of things that will happen. So, the question of productivity, it was Robert Solow who said that technology is showing up everywhere, but in the productivity data. So this could be the same kind of thing where it's there, but it takes a long time kind of to show itself, because you would think of another big technological advance as potentially raising productivity, but I think it's early to say that we're seeing it. Also, you're seeing, I think some researchers have found effects on hiring from AI for entry-level people and for coders and things like that. So there's probably some of that out there, but it's just so early to say what it will be. We also monitor very carefully what public companies are saying. Increasingly, bold statements from mainly large private companies on things that they think they can do across their whole business area with AI, and either sort of freeze hiring where it is or reduce hiring. And I think we're pretty aware of what the potential outcomes are, but the range of potential outcomes is very broad. I will say, in terms of what the Fed can do, we deal with supply and demand. We have an interest rate, and we also do regulation, that kind of thing. But if what's needed is greater education and skills, I've always liked the model that technology can work for everybody as long as everybody's getting the skills and aptitudes they need to use that technology. This is Golden and Katz, their work, which they actually spoke about at Jackson Hole this year, but it's a 20-year-old book that they wrote. So we can't do that. That's not something the Fed can do. we also can't address the potential societal disruptions that could happen, potentially, if there's really significant job loss. So there are a lot of, we're the least of it. There are potentially really significant implications for people in the labor force. And I think we're all speculating about what those might be, but it's only the beginning of this story.
Yeah. Looking at some of the other questions that are getting upvoted, and you can get as far into the weeds as you want, but this is where people want to go. So let me try this one. As you think of the appropriate level of reserves in the system, what indicators are most important? Is it the price of money, so repo levels, or the volume of borrowings from the Fed, like the discount window, and so on?
So we have a nice spider chart and 5 main indicators, one of which is sort of repo levels. And I think overall what they're showing is that we're still at ample reserves. Abundant reserves. We're still at abundant reserves, meaning above our goal of ample reserves, a little bit above ample reserves. So, but we're beginning to see, you're starting to see a little bit of tightening in money market conditions, particularly repo rates have moved up. And those are the things we're going to be watching. So we think we're still at abundant, and we're, the pace of runoff is now very, very slow. So we're going to be watching all those factors very carefully. We're not so far away now, but there's a ways to go.
I think we're not going to get away without addressing this one. So I'll try to, again, group some of these together. First, there's definitely appreciation from the audience, your ability to try to remain above the political fray. And I think also, and as in your remarks, you said gradually and predictably, and that sounds really nice right about now. But with that ongoing scrutiny of the policy decisions of the Fed, what measures is the Federal Reserve taking, and are you taking, to ensure and demonstrate the continued independence in setting monetary policy?
So the main thing we can continue to do is to do our work the way we've always done it, which is, think really carefully about evolving economic conditions and the evolving outlook and the balance of risks, and try to make good decisions to best serve the American public, and then explain those decisions and talk about them in a way that makes sense and is grounded in the data and our overall approach. I think we're going to keep doing that, and as long as we're doing that, people will be able to tell. If we start doing something else, I think people will be able to tell that too. But that's just not something we're ever going to do. We're always going to keep doing our work. We don't engage in back and forth with people. It's just not that gets to be political sort of right away. So we just do our work and do it as best we can. Overall, I would say the Fed comes through the last, if you think about it, go back to the beginning of the global financial crisis. We've had 2 world historical crises back to back, essentially. And the U.S. economy, it's been quite a ride for the U.S. economy and for American citizens, but we've come through it as well or better than any other country in the world. And we had to innovate and did innovate. There was really no choice. We can look back now and as I did today and second guess ourselves, which is only appropriate. That we've been doing it for 10 years. Since I got to the Fed 12 years ago, we were already doing a lot of that. So that's an ongoing process. But I think if you take a step back, the Fed isn't a government agency that does a good job for the public that it serves. And that is our only goal. And I think we do it pretty well. Don't look for perfection. These are close calls that have to be made in real time. But I guess that's what I would say.
It's fantastic. And in that context, then, internally to the FOMC, how important is it that you have consensus on it? We're economists. We understand the value of spirited debate, and but is that important in terms of communicating the results?
Literally
and the
on my list.
Of the committee?
Consensus is great, but the most important thing of all is to get it right. And that you come to places, not very commonly, but sometimes you come to places where people are going to have different views, and this is one of them. You have a situation here where literally inflation's above target and gently rising. the labor market is subject to pretty clear downside risks. What do? How do you think about that? That's not a problem that you face very often in central banking or in the economy. And people are going to have different weights and different risk aversion and different risk appetites on those things. It would be kind of surprising if you had no debate over those things. So we have a healthy debate going. I think it's very healthy. I think the meetings that we've been having are as good as any we've had, in terms of people sincerely, giving their absolute best argument for their positions, but they're different positions. That's, when I was an investor, I always felt like the most dangerous thing is if everybody agreed on something, because you need someone to come in and try to explain why this is a terrible idea.
Totally
Hopefully
right.
Somebody really smart. And that would give you the ability to really test your thinking.
This is why I love Ross Gerber.
It's a healthy discussion that
He has the balls to tell you if something's a terrible idea.
Have people across the board. I do think we also, as an institution, do try to come together around a central answer, and that's of course part of what I try to do is find an answer that will attract as much support as possible.
Absolutely. I know you probably won't want to comment in great detail on global conditions, but there are a few questions around that and what that implies for U.S. monetary policy, and also just looking at the interest rate differentials between the U.S. and other advanced economies, and how long that could persist, and is there a risk there?
Sorry,
the interest rate differentials between the U.S. and other advanced economies.
Yeah, we set interest rates according to, the place where our economy is domestically, taking into account the international aspects of our economy. So again, it's not surprising. You could name many, many factors, but, for example, tariffs are clearly more disinflationary for countries that are subjected to them, and they're more, I won't say heavily inflationary, but there's some inflationary pass-through to consumers from countries that are putting tariffs on. So there's a very different monetary policy response potentially just in that. I think we need to set, as every other central bank does, they're setting rates in whatever their remit is geographically, and they're going to be different answers. It's not unusual.
So we have a large number of young economists in the audience today. Could you talk a little bit about, as we look back, and it's a momentous award, it's a nice time to reflect. If you looked back on your early career and your early goals, how do you think that young Jerome Powell would view where Jerome Powell is sitting today as chair of the Federal Reserve?
Lost the lead.
Surprised. No, I would say, so what I would tell young economists is you've chosen a great profession, a tremendous profession. You're getting the tools to analyze public policy and what works and what doesn't work and what should be expected to work and wouldn't and why. And also what's the state of the economy. And guess what? It's not just hard, it's basically impossible. But it's a very, very difficult thing, but it yields itself up over time. And it's just an incredibly important subject that carries the capability to do really good things for the general public, who may not feel great gratitude toward economists, but sometimes. But no, it's a really important. You made a great choice, and I would say wish you the best of luck.
Thank you. Agree. Okay, we'll do a little bit of a lightning round here. We have about 5 minutes left, so I'll ask a bunch of questions that you may not want to get into great detail on anyway. Yeah. Some of these are pretty straightforward, but so we talked quite a bit about labor markets, but we have not specifically asked the question about the effect of immigration policies on labor supply. How restrictive do you think that current policy is, and is that something that will just
current immigration policy?
Yeah.
Yes. Let me start by saying that we don't have a view on immigration. It's not our job to have a view. So we take that as completely, it is what it is. We take it as it arrives. More I'd say, stronger policy than most people had expected. We've seen very sharp decline in growth of the labor force and in people entering the country, and yeah, I think you're only beginning to see the strength of that policy too. There's more expulsions; those are rising, and that kind of thing. So yeah, that's a big economic factor. So that will mean fewer people to work. You have anecdotal evidence of industries that are just having a hard time finding people. You don't see it in wages or anything like that at this point. You don't see, at least in the aggregate, you don't. But yeah, it's going to be a really important economic fact because that's new people who come into the workforce. They create their supply, but they also create demand. They create their own demand, and again, from our standpoint, we're just, our job is to achieve maximum employment or maximum sustainable employment. And that will depend both on the supply of workers and the demand for workers.
Back to the balance sheet, some questions. Again, I'll kind of try to group these together around mortgage-backed securities and housing affordability. Again, not directly part of the dual mandate, but would the Fed ever look at any specific actions with regard to MBS to address mortgage rates or affordability for housing?
The answer is, look, we look at overall inflation and we don't target housing prices. And also I don't know how you would, we would certainly not engage in mortgage-backed security purchases as a way of addressing mortgage rates or housing directly. That's not what we do. We do have, as I mentioned, a very large amount of mortgage-backed securities, and they're running off, but they run off pretty slowly.
Fair. Question on the beverage curve.
Oh, that's a big one.
Maybe that's
there
not a
lightning
lightning round question, but let's try it.
That's a huge
do you
one.
think that the shift in the beverage curve is a structural shift or just a blip?
I think it's, you're at a place where, further declines in job openings might very well start to show up in unemployment. You've had this amazing time where you came straight down, but I just think you're going to reach a point at which unemployment starts to go up, and we haven't really. We may be hitting that now, but it's been remarkable how that line just comes down, and which has been really a great part of the recovery.
All right. Well, we have just a couple minutes left. I think we'll end with maybe another sort of philosophical question. Michael Barr spoke to the policy conference in 2024, I believe it was, and he gave some advice to economists. What would your advice be to the economists in the room in terms of how we can best serve the challenges that are facing us collectively in this moment?
I'm inclined to say keep your heads up. It's a time when people are challenging expertise, and I think it's a distinguished profession. It's a very high order profession, and you should be proud of your work and keep at it. Ultimately, we're learning about how the economy works and how society works. Our understanding is so basic and so uncertain, really, still after all these years. But you got to think we're making some progress and doing some good, and imposing sort of an analytical framework around the kind of decisions people make about the economy. So I just want to give you a vote of support and say keep at it.
And likewise, NABE supports you.
Okay.
Are we done?
We're done. Thank you so much.
Are we done? Dude, he's so done, dude. He is so cooked, this poor guy. He's like, bro, I just want to retire. I'm tired of this shit. All right, let's do a full breakdown of what Powie Wowie just said. Boy, oh boy, there's actually a lot. But we're done. Yes, we're in fact done. All right. Full breakdown time. This is actually, there was some stuff here that was not expected, I have to say. I don't think I got a lot on my bingo board, but I don't actually think I got bingo, but we'll look at that in just a moment. So let's go ahead and cover this, okay? Ready? Didn't get my coffee. That's all right. All right. Well, Powell just flipped. This is wild. We just potentially got Powell telling us that he's turning the vacuum cleaner off. And let's just say he gave some hints as to why he's turning the vacuum cleaner off. So let's get into that. Note this video is going to be sponsored by Investing Pro because they've got their Pro Plus flash sale going. If you use that coupon code, you not only get the 50% off that they have on their website now, but you also get the extra 15% off. More on them later, though. Let's focus right now on Powie Wowie, what was just said. Okay, so first of all, as expected, when we put together our bingo board, we thought that Powell was going to talk down the fact that we're not getting labor market data. We actually wrote here that he would downplay the BLS data, that we have other data that we can get to, and that the labor market's not falling off a cliff, and that we're on a wait and see. We're not getting a rug pull. We want to get closer to neutral. A lot of this pretty basic. You know, we've seen a lot of that so far. And this reiteration that we're in a low higher, low fire market, we've heard of this before. But what was new here was that Powell came out and spent the first maybe 10 minutes talking about the balance sheet. Now, to understand the balance sheet, I want you to think about the money printer days, okay? So think about this as simply as possible. Oh no, the economy's in the pooper. Bring out the money printer. You run the money printer. Basically, what you're doing is you're growing the balance sheet, okay? You're printing money, and the way you print money is you just digitally go into a spreadsheet and you go, well, we were at 6 trillion, let's just change the number to 9 trillion. So you literally just change the number on the spreadsheet. And all of a sudden, out of thin air, you've created $3 trillion. And then you go, here you go, Congress, go shower the economy with money and save the world. That's basically money printing in a nutshell. That has now substantially increased the Federal Reserve's balance sheet. Now the Federal Reserve is interested in reducing the balance sheet, which they've been doing since 2020. They're like, we've gone too much. We're reducing the balance sheet. Now the Fed is talking about no longer reducing the balance sheet. So think about increasing the balance sheet, running the money printer. Think about reducing the balance sheet as vacuuming. So you're like, we put too much money. Going around sucking money back out of the economy. You're absorbing by basically saying, hey, we're going to sell bonds, we're going to take money out of the economy, and we're going to try to use that as a tool to restrict. Well, now Powell's like, did a lot of vacuuming. We're just going to go over here and go, click. So in the coming months, he's going to turn off the vacuum cleaner. Okay, well, what does that practically do for us? Like, what's the trade, bro? Kevin, just tell me, what's the trade? When you turn the vacuum cleaner off, what you're really doing is you're saying, okay, we are going to go and no longer put this pressure on the treasuries market, which could mean that we might end up seeing yields actually start coming down, which is nice. We might also see, because remember, the whole point of vacuuming up money is to increase market rates. And if you increase market rates, you're basically tightening to try to control inflation. You say, all right, we've done enough vacuum cleaning. You stop doing that. You stop sucking money out of the economy. You stop selling those bonds. By selling bonds, what you're really doing is you're increasing the supply of them. I know that gets a little bit complicated. You increase the supply of them, the price goes down, yields go up, right? You stop doing that, you actually let yields come down. So bottom line, I know that gets complicated. When the vacuum cleaner turns off, yields get to start falling. Now, he told you which part of the curve. He literally told us which part of the curve. Now, you could use this obviously in your investing by going to investing.com and using the Investing Pro coupon code to join. Make sure you check out earnings per share. Make sure you check out the analysis they have because they're great sponsor of the channel. But he told us, Jay Powell specifically told us which bonds. He said, ideally, we want no mortgage-backed securities in the future, so they want to get rid of all of those. Once they're done with those, they're not interested in MBSs. All they want are treasuries. And they said that right now they are overweight longer-term treasuries and underweight shorter-term. This means that once we kind of get rid of the rest of these longer-term treasuries, that's where you might see some of the biggest shift by turning off the vacuum cleaner, which is probably bullish long-term rates coming down, bullish mortgage rates coming down, the 10 to 25 year end of the curve probably coming down. Now, why would Jerome Powell do that? Why turn bullish here, or should I say dovish? This was more dovish, right? Which is bullish in the short term for the stock market. In fact, that's what we wrote over here. I actually originally thought we were going to get a neutral Powell and that we would end up getting yields up. But what we actually got was a dovish Powell. And we thought, okay, but if we get a dovish Powell, then we will end up seeing yields come down, which is what we're seeing. Now, what does this mean? Why is he going dovish? Well, one of the reasons he's going dovish, he was asked about at the end, is because he says we might now be at the point where the beverage curve is normalizing. Now, this is another complicated one to understand. I'm going to keep this as simple as possible. Because if you're not familiar with the beverage curve, you're like, okay, what are we talking about? Like Coca-Cola or Pepsi? Or like, you know, what's the play here, man? I don't understand. Look, this is very simple. This chart is the normal version of this chart, the non-perverted version of this chart. It's basically how it normally operates and has operated for the last 40 years. Okay? Something very odd has happened recently, though, with this chart. And if you look at the chart, I'm going to throw these little stars over here. The vacancy rate has plummeted. So we've started putting a bunch of dots basically where these stars are. And this is what Powell said when he goes, yeah, beverage curve, that's gone straight down. He says we've been fortunate of that, but we may now be at a place where the unemployment rate starts going up. That turning point may be now. Okay, that's bad, because what this means is if you normalize this curve and you start getting data that pushes you this way, which is the normal path of the curve, then data points start coming out along this way of the curve, and the unemployment rate's gonna skyrocket to 10 to 15% rapidly. And he says we may now be at that turning point. So think about this. He's actually being mega dovish here without saying, hey, we're gonna rapidly cut a bunch of, we'll do a bunch of rate cuts. He's telling you, yeah, we're turning off the money vacuum because we need to start stimulating the economy because we have serious risks here on the labor market. On the other hand, he's like, we don't want to send the signal that we're going to cut rates really rapidly because that's going to mess with people's inflation psychology, which he was also worried about. He's like, look, most of the pricing pressures right now are coming from tariffs. He says structural inflation, very, very low right now. Most of the pressures are from tariffs. So think about what he's doing, okay? There are 3 prongs to what Powell is doing here. 3 prongs. All 3 of the prongs tell you should join the Meet Kevin membership. Oh, that's a funky little video there, isn't it? Because you got like 2 pictures of me on top of each other. Let's go with it. Okay? Join the Meet Kevin membership. People say the ad goes away once you join. Potentially tax deduction. You get our trading strategies every day, short, medium, long term. Top 10 stocks to buy for the next 10 years. You see when I start trimming NVIDIA stock or selling NVIDIA stock in this crazy AI bubble that we're in, and would love to have you in the membership. Anyway, no, the 3 prongs that we just saw from Powell, think about this. 3 things he just did. All of them point in the same direction. He told us, 1, beverage curve normalization is upon us. That's part 1, okay? Part 2, he tells us that inflation from tariffs is the remaining inflation, but normal, like structural inflation, not present. Only tariff inflation, basically, okay? That's prong 1. So prong 1 is beverage curve normalization may be starting. Okay, that's a red flag. Okay, this is important. Red flag for recession. You get a normalization of the beverage curve, we will be in a recession faster than you can blink. He actually also told us, which is very interesting. He actually said that the first thing to slow with rates is purchasing. Labor takes much longer. That's the long and variable lag portion, right? Okay. Number 2, structural inflation is not present, only tariff inflation, which again, all of these reiterates support jobs, okay? Reiterates dovishness. Only tariff inflation. What does that do? Support jobs. Dovish, okay? Then the third one. So beverage curve normalization, we got that. We got structural inflation, not present. And then obviously we got his argument that very clearly we are seeing a desire to get back to neutral. So back to neutral, support weakening labor market, which is somewhat is reiterated by the beverage curve anyway. But pull all of this together. This shows up. How do you do this? Balance sheet runoff stopping. That's probably the better way to put number 3, right? Balance sheet runoff stopping is basically to support jobs. It's actionably dovish. Like, this is not Powell being verbally dovish. It's him literally saying, hey, we're about to take action to stimulate because the jobs market is starting to show serious signs of issues. He's discounting the BLS data for now, saying we have other data we can get our hands on. But he also says, hey, we're about to miss out on a lot of data. Like, we're about to walk into, and this is where the Bureau of Labor Statistics came out with, Bloomberg was reporting on the BLS this morning. They actually wrote that the September report will be very important. We might not get it, though. The October's report will be missing starting if the government shuts down is still shut down in about a week from now. So if we're still shut down next week at this time, which we probably will be, we're going to start screwing up the employment survey and the payroll survey for October. Remember, the government shut down on October 1st, so we probably had a lot of our surveys already sent for the September data. And a lot of that data is probably bad because it would show the Doge layoffs and the voluntary dismissals. Those were supposed to show up in the September report. Now, we would have adjusted for that. We would have added that back in. But, we expect the break-even rates basically 0 to 20,000. So what if the labor report showed negative 50 and 50 of those were, from the government, the voluntary departures? Okay, add that back in, you're at 0. So maybe you're right at break-even, unemployment rate doesn't really change, right? Fine. But what if it was negative 100K? I don't know. It's maybe Donald Trump purposefully doesn't want these job reports out. I mean, he wants CPI report out because he wants the COLA adjustment for 69 million voters who are receiving retirement benefits like Social Security. And Donald Trump, scores really well amongst older voters. So of course he wants them to get their cost of living adjustments for Social Security payments, so he brings the CPI report back. Why does he? Then he obviously has the power to bring the same damn people back to give us the jobs report. But why would he do that? That would just make him look bad. So leave that part of the government shut down. Little manipulative, right? But that's exactly what's happening right now. So as a result, Powell's like, we know the data is probably bad. He's like, not only can we look at state unemployment claims, but we can also look at ADP data. Now, in fairness, he said so far, data on the economy and GDP are actually stronger, maybe just as firm as what we had at the last meeting. But he does make it clear that, like, hey, we could look at other data. Look at ADP, for example. And what happened with ADP? ADP at the beginning of this month, we were expecting 51,000. The prior read was 54,000. Remember what we got? Negative 32,000. And then it's like, oh, but what if you add back in the 40,000 adjustment? Add them back in. You're still at like 8 to 14,000 jobs. That's a terrible ADP report. So it's not a surprise. Like, if you actually break down what Jay Powell just did, he actually just turned dovish. Now, it's probably going to take a while for the market to digest all this stuff. But Powell turning dovish is exactly what they should do to avoid being too late. Powell doesn't want to be Mr. Too Late. So consider that. again, the three big components here. Number one, we're turning the vacuum cleaner. Well, number one is the beverage curve normalization. We could be at that point. That's really dovish. It's like, we're at the turning point. Two, structural inflation isn't present. It's only tariff inflation, which they've said they're going to look at that as sort of like a one-time occurrence, not necessarily at one point, but over time and then one time. And then that's dovish, right? Because you're not worried about inflation as much. And then, of course, balance sheet runoff, stopping soon, turning the vacuum cleaner off. That's huge. So all of these things are dovish. This is a massive dovish flip from Powell. And it's potentially a game changer for, what we're going to do in the Alpha report in terms of our top 10 stocks for the next 10 years. We've got 6 of them are posted. Stocks 7, 8, 9, and 10 are coming out soon in the Me Kevin membership in the Alpha report. And then, of course, check out the sponsor, investing.com. Use that coupon code MeKevin. And you can use coupon code Schumer Siesta.
Coupon linked below.
To join us in the Me Kevin membership. But let me just make sure I didn't miss anything here on Powell, and I'll look at some of your comments here. Somebody says, do you think that rates will go down 50 basis points? No, because they don't want inflation expectations to get screwed up. So if you actually look at Wall Street, you'll find that currently we are pricing in a 96.7% chance of a cut October 29th and a 98.4% chance of another cut December 10th. So we are pricing in a full 2 rate cuts. But everything that we've seen here is broadly bullish on yields coming down. Now, is that potentially recessionary because Powell's waking up? Sure. That's the struggle that we're going to have to balance out with the stocks. That's where we have to look at it and go, all right, well, if we are about to have the normalization of the beverage curve, the unemployment rate pops up, and then we go look at like Salesforce to show us earnings on Agentforce AI, which is like a scam in my opinion. Oopsies! That might not be a very good bucket to reach into. It's sort of like, hey guys, everything's fine. We have this AI bucket. We have all this AI bucket of revenue. And then all of a sudden, unemployment rate starts skyrocketing because the beverage curve normalizes, just like it always does in history. And it's like, it's okay. Look at all this money we're making from AI. Oh, shit. The whole thing has no legs. The whole thing implodes then. So it's no surprise that gold is doing what it's doing. I mean, look at gold in the last year. That is like a double on gold. When does gold return a double, dude? In a year? That's crazy. I mean, it's not quite a double, but it's pretty shocking. Somebody says, just curious, employers lay off, continuous and high profits, strict immigration enforcement, stock market pushes up, inflation, government shutdown with better. I'm not really sure if you're asking a question though. That was a really good list though. So somebody asked, will that put pressure on the leverage side? Well, I mean, look, you should already have your debt warnings from what you saw Friday. Like triple and double leveraged ETFs will probably go bankrupt in the next downturn. But we literally saw, last week an inverse AMD triple leveraged ETF went bankrupt, evaporated, and you're going to see more of that. The next debt cycle, it's going to be crazy. It's going to be crazy. So somebody here writes, technology isn't showing up in productivity numbers yet. No, the reason for that, and I wrote that down too, one of the reasons you may not actually see, I'm going to explain this, okay? So if you're still with me here, good for you. You're going to get some extra insight here. So the question is, why are we not seeing some of this AI stuff show up in our productivity? Okay, let me give you the most simple explanation as to why you're not seeing AI in productivity numbers. AI in productivity numbers, okay? So let's make an example of how this is done, okay? So widgets produced equals 100 per hour, okay? Demand for widgets is 1,000, let's just say, okay? And let's say AI makes it so, well, let's put it this way. Let's say to do this, we need 2 guys working 5 hours to do this, all right? To make this happen. Let's say AI makes it so that 1 guy can do 100 widgets, or, you know, can do 1,000 in 5 hours, right? That one guy's productivity doubled. Company output stayed the same. Company costs on labor halved in this example, right? This could be like shipping software. It doesn't really matter what it is. All right, so the company costs halved, but the company output stayed the same. So did net productivity change? Did net productivity change economically? No. The output is the same. Okay, the output is still the same. Except who won? Who won? The corporation won by spending less money. Revenue didn't go up necessarily because of AI. And that's like, whether you call this a widget or you call it a service or whatever, this is what you logically have to think about. Is artificial intelligence going to change how many emails we can send per hour? Yes. Is it going to change how efficient we are? Yes. Is it going to change demand for our goods and services? Not necessarily. That's the problem. So AI might change the costs of the corporation and how much money they can earn, but it does not necessarily mean that their revenues or their ability to sell goods and services is all of a sudden now blowing up. So that's a downside for labor. You increase corporate costs and improve efficiency, but that does not automatically increase demand or total economic output. So basically, aggregate productivity growth doesn't actually show those efficiency gains. So when Powell's like, yeah, we're not seeing AI show up in the productivity stuff, well, duh. And this is what people forget about artificial intelligence. Is let me just give you, I'm going to leave you with a basic example, okay? Let's say you go, hey, I'm an attorney and I've got 10 customers who need a trust drawn up, okay? 2 years ago, or 3 years ago, I'd have to have 3 interns or paralegals drafting these trust documents, and then I have to proofread them, and then it goes back to them, and grammar errors and spelling and all this bullcrap. 3 years ago, I need myself and 3 people to do my 10 trust documents for clients, okay? Today, I could go, all y'all paralegals are fired. And then I could go, GPT Pro, make trust document for those 10 people. Then I read it with my lawyer hat and give my professional opinion on top of that. That's why people hire the attorneys still. Because the attorneys are using GPT as well, right? But then they add, we need to put this clause in. You know, it's that extra 10% that you're paying the attorney for, right? So they put their little 10% on. Does that mean the attorney has more than 10 clients to service? Well, not necessarily. Now, technically, the attorney now has more money available. What could they do with that more money? Well, maybe they can go run more ads. But then the question is, even if that attorney has more money to run more ads, are there more than 10 customers right now who need those trust documents? Because if every attorney is now running 10% more ads, people are saturated with 10% more ads, they feel like they have more choice. Does it actually mean more customers for that attorney? Not necessarily. They might be spending more ad money just to stay par. But again, that attorney's net income is higher because they spend less money on that entry-level labor. Look, this is just coming from experience. We saw exactly this over the last 2 or 3 years at HouseHack. We're like, wow, we could do the same amount of work with half the staff or less than half of the staff. And we're like, damn. So we're looking at it as a corporation going, oh man, this is great for our shareholders because earnings per share is going to go way up. And we're like, this is great. You know, does that mean the company is more productive? Well, obviously, I think the company is growing and being very productive. But I was just saying, on net, does it actually mean a company is more productive? No. We're getting the same done with less, which is great for corporations, great for shareholders, not great for labor. And that's why Powell is probably flipping a little dovish here. So in the short term, it's actually great for markets. Because in the short term, the market's just going to look at it and go, damn, Powell dovish? The punch bowl's still rich and full of booze. Let's keep the party going. Obviously, we're probably going to walk off a cliff at some point. But, I mean, for now, this is great. This is bullish. This is fantastic. And you know what else is fantastic?
Kevin's somebody we'd consider. Kevin is fantastic, too.